What's up? Good morning, traders, friends, family. Come on over. Have my light turn on in the office. That's rare that I have it turned on. Do you guys like it on or do you like it off? Let's talk about it. Let's see which one's preferable. Light goes off. Light goes on. Light goes off. Light goes on. Oh, I just crawled out of bed, looks like. Hold on, let me fix my beautiful part here so I can look a little more handsome for you guys. Light goes off. Light goes on. Light goes off. Light goes on. You know, I have on my neon lights and stuff. I was deciding, like, should I put my neon stuff back up in here? Put a little bit more, you know. But I've decided against doing it so far. Yo, what's up, everybody? Hey, good morning. All right. You know, my morning routine. Wake up, come here, hang out with you fine folks. What's up? DJ, Rob, Butchers, Trading with Wafa, Dustin, Plan Zero S, Visionary, Rob, Hydra, Mark, Francesco, Trug, Rob, Dustin, Plan Zero, Frank, Mr. Clutch, Simon Dean, Questa, Tommy Ruff. What's up, bro? Hey, what's up, Tommy? Did you have fun? You'd have fun in the snow day, dude? Did you go out there and like have fun like we were like kids again? I was building snowman, throwing. Dude, we got, when it snowed here, I stepped in my backyard. It was about this deep. Like my foot went all the way through the snow. That's never happened before. He's like the first time that's ever been that way. What's up? Hey, what's up, David? Good to see you, man. It's been a while. All right. Let's look today really quick on the news here. I don't think that this market is going to recover. I don't think there's a dead cat bounce today. I'm going to tell you what I think is going to happen. This Nvidia news was like any other, you know, it was like pretty big, but it's got to take a day or two to figure this out. Do I think Chinese AI is going to tank the American stock market? No. Yesterday was a stock market like one-off. Yesterday was not a market crash. Yesterday was an Nvidia crash. This is a lesson on the weighting of market caps and indices. Our market cap weight of Nvidia is so much it caused the market to move abnormally. The majority of sectors were good, right? We didn't have a big old market crash of all stocks. None of the stocks really care about the AI nonsense. You know, to them, it's like, you know, companies were just acting like normal. We were looking at, you know, gap fills and everything, and resilience was positive all day. So I don't think we get like a big dead cat bounce. But what I do think is that we end up trading inside of yesterday's pivotable range. So like here to here, I think I thought we would go up, at least go back down, and then figure out what we're going to do. If Nvidia starts to do well, market's going to do well. But here's the one thing about market cap as well. Something that is a big weight on an index pulls it down really heavily while it's a big part of the market cap. If it loses a lot of its market cap, it weighs less, so it starts to pull a little bit less to it. If all the other stocks are doing good and Nvidia crashes, the best part is that I'll teach you guys something about the math here. This is a little. Let me wake you guys up with some math to think about. I'm gonna hurt your brains for a minute. Yeah, y'all ready for this? Y'all ready for this? If the index is moving because Nvidia is moving, that's an N and then index. And Nvidia starts to tank because it's such a big part of the index will start to tank. And then the next day, and if no other stock was tanking, that would do this. And if Nvidia fell the next day, the index would fall like this. And if Nvidia fell the next day, the index would fall like this. And Nvidia fell to 0, the index would stop carrying. At some point, it's like a self-healing thing. The best part about market cap weighing is that something only drags the index down with it when it's really high weighted market cap. The less market cap it has, the less pull it has on the index, right? So at some point, Nvidia alone crashing is going to stop crashing the index. Does this make sense to you guys? Is that making a lot of sense? Like, when it's the top stock, the top 5 stocks, it'll yank things down. If Nvidia loses half of its market cap, it's no longer one of the top 5 stocks in the S&P. other stocks that are the number 1, 2, 3, and 4 will keep the S&P from falling. So it's less, if Nvidia falls to 0, it has less market cap is falling. So the index will start to slow down its decline as Nvidia has a smaller and smaller percent of the total pool of market cap, right? If it's one stock, and its market cap weighting is designed that way, so that one stock, the market's sensitive to one stock, but the market isn't always sensitive to one stock. At some point, you know what I mean? All right, it's today. Lower range is support. Upper range is resistance. I think we spend a lot of our time in here at some point before we rally. Something like this, I'm going to tell you guys, market never forgets. This would be the rarest of the rare. Market never forgets. Whatever it does, it's probably going to do that if it's going to rally, okay? We got a couple days of downside. We'll see what the monthly map say today. What up, friends? Good morning. Good morning. Yeah. All right. Let's do this really quick. All right, you guys. What do y'all think? Let's think about up or down today. How do y'all think we're doing this? Hold on. I feel like this side of my face could use a little more light. Hold on. Like I'm sitting here in the dark. Maybe not that much light. I kind of like sitting in the dark. Reminds me of being a vampire. But maybe not that much light. I'm still thinking about like how I want to design the office. I'm like done most of it with the office, but I kind of want to do more things. I just have this like feeling of there's more things I want to do. All right. Upper movement bounce. 60, 68 yellow line, 59, 70. I think we'll probably be inside of this range here today. Not breaking highs, not breaking the lows right there on the S&P. So we're talking NASDAQ kind of in a similar boat. But we're going to take whatever we get, right? We're going to trade off of whatever those numbers are in the morning. Where are you from? I'm from Texas. Where are you guys from? I'm curious where our viewer base is from. Let's do it. Let's play a game. Tell me where you guys are from. Austin, Atlanta, Austria. Who is the person that's the farthest away? I knew you were from Austria, though. We talked about that before. Buckeyes. Tulsa, Dubai. Oh, snap. Berlin, Vancouver. We are truly a global community. That's amazing. I officially have one person in every country now on the stream. That's amazing. Israel, South Carolina, Utah, Albany, St. Louis, Atlanta, East Tennessee, Netherlands, Maine, Russia, Utah. That's crazy. Now you guys are all friends with each other. Not each one of you knows somebody in a different country. How about that? Life is awesome. Okay. And I am from Houston, Texas. The Lone Star State. Kulu from Zimbabwe. That might officially be the farthest. If not Russia. That's crazy. The Ballroom of Reno. Ballroom, Latin, and Swing. Let me guess, Nevada? Are you a dance instructor? That's really dope. Ballroom dancing up, something I always wanted to do. Okay, today's market. Let's look at what's going on. Let's get our data front and center. Nothing crazy in the news, but Trump is still kind of out there threatening tariffs, fighting with Canada, the usual. Never know what to expect. We'll have to see if he says anything today. We had some numbers come in. Let's talk about them. This week's news. Streaming from Thailand, but you're a fellow Texan. I knew you were a Texan. Wait, what are you doing in Thailand, man? All right, this week, durable goods came out. 7:30 this morning. S&P Composite. Over here, HPI. Not the biggest thing, but CV numbers come out. 50 minutes, there's your catalyst, to be careful for that one. That's the event. Wednesday, we've got the Fed now and FOMC. So this is a big deal. Wednesday, I'm going to tell you FOMC is going to have no interest rate change. With all the things going on right now, they're going to be very, very lean on any activity. You're not going to hear much from them. You're not going to expect much from them. Expect the Fed to do very little. As the dot plot suggests, they have 2 rate cuts planned this year. January won't be one of them. Let's check out the futures really quick. You can watch how Wall Street's betting by going to the See Me Fed Watch if you want to. You can see that the majority of participants believe that 99.5% still think we're staying the same. About 0.5% think we're going to get the cut. So obviously Wall Street is going to freak out if there is a cut, freak out if there's a hike, expecting nothing. So I'm expecting nothing. Bigger stuff comes out Thursday. Thursday's going to be the bigger news day than the Fed. I think the Fed's going to have very little to do with the market movements this week. I think the bigger things are going to be direct in relation to inflation. Fed's going to do nothing, but that dot plot that's going to come out, it's going to be sensitive to that. Because last time, you know what the dot plot is, right? It's this thing that they do where they all kind of like vote on what they think the rate should be. I don't know if I can get the old one out. And it looks like that. And it says like 2025. That's supposed to be 2025, but I put 2205. Anyways, and you can see how everyone's distributed on their votes. Like you can see like, oh, okay, the majority of people are like there at whatever that rate is, right? But the thing is that the dot plot, let me draw it on the blue so it's better. The dot plot used to be like a nice clean distribution when Biden was in office. Like, you know, it was like this with all the participants. And it was set up so that we were going to get 4 rate cuts of 25, a total full basis point. However, the minute Trump went into office, it looked like this. Like it was almost like corruption at its finest. You had a split in the middle immediately after, and it turned into this. That's why the market flipped out when that happened. Somehow, between month 1 and month 2, half of the Fed were like, psych, I know we said rate cuts, but we were lying. We just really were there. And this is where the Fed members were trying to make the stock market look good into the election so that Biden would have a chance to win. And then once they got out of that election time frame, they just mysteriously changed their mind under no changing economic conditions. And somehow people that were down here were up here, and then there's a split in the middle. Anytime there's a split, you know that's going to have a hard time having anything happen. And so Wall Street flipped shit and the market crashed off that Fed dot plot, right? So the idea was that half of those people were sitting there pretending they wanted to be more aggressive on rate cuts, and then all of a sudden, when Biden wasn't, or whatever her name was, wasn't reelected or elected, Kamala Harris wasn't elected. I don't even remember her name. They immediately changed their mind under mysterious circumstances. The stock market was doing better, economic data doing better. For some reason, they thought that was worth half a basis point worth of opinion. I don't know. Oh, you can't see Trump's stop plot. So I'm going to turn on my thing tonight, I promise. I'm going to turn on my tablet. We'll get back to it. Guys, don't forget to hit that like button. We're front and center live. Trading some Tradeify accounts today. I'm going to get a payout next week if I keep going. Doing pretty all right on these. I get hit a $9,000 profit target while maintaining consistency. I'm aiming for about $2,000 a day, give or take. I know for the 10-day period, that'll put me right about 20. But that gives me a buffer in the account for the second payout 10 days later. So, anywho, that dot plot's going to be very interesting because this time around, we need to see how everybody's really distributed. Are people still really split on, we're probably going to do like 0 change, and then I think it was 0 and 2 cuts, like that. Half the people were like, no, we're kind of okay with what we have. You know, 3.5. I'm sorry, it was 2 and 4. 2 and 4. Some people were like, you know, 3.5 is the lowest it's going to go. And other people were like, we should go down to 3 and 3.25. Or no, 3.25, 3.5. So, you know, how does a whole camp of people collectively drastically changed their mind overnight. I'd understand if there was a couple of drifters from month 1 to month 2, but it was literally half of the participants in their votes. You got to say, like, when you're here, I teach you guys how to read the real stuff. We use committed traders to find corruption in the banking side of things, right? We talked about that. I'm gonna let him know this is too small. This is completely too small. All right. What's up? What's up? Remember we talked about corruption, the commitment of traders? We mentioned that the other day. We teach you guys all the real stuff. A little bit of corruption. I mean, everybody's always batting for the home team, doing what they can. But, you know, obviously it shows a camp of people collectively changing their minds when there's a new regime in office. So it only leads to one conclusion, is that they were very optimistic about letting the public know their intentions, such that it was braggable with the Democrats to go into, you know, the election with every opportunity they can. Obviously, if the Fed were revealing their true intentions, the market crashed. So obviously they didn't do that until it was opportunistically perfect for them to do so. So clearly half of the participants are blue-blooded Democrats, as you can tell. Now, these are the things you have to do as a trader. You got to piece the stuff together. Wall Street's not a fair game, baby. Hold on, let me take my belt off here. Whew. I'm going to spank this market today. We went to IDOC's families last night. It was the Lunar New Year. You guys know any Vietnamese here celebrate Tet? We were doing our little Tet celebration last night. So we crashed over there. You'll put on some better music. All right, so today's setups, like I said, I think just you guys are tuning in right now, I'm going to tell you, I don't think we're going to get much. I don't think we're going to get a lot of actual. It would be weird for us to straight run rally and dead cat bounce. I personally think that because it's just an Nvidia only thing, that we're not going to break lows. That's not going to happen. If we do break lows, it's going to take 2 or 3 days to break lows. So just keep that in mind. I fully anticipate like a widening range right inside of here if the volatility still stays high. Either something there, and then there's your equilibrium. You guys can see your equilibrium right here. And if it does rally, it takes like 2 days to get there. But if it rallies today, we'll see. You know, we take the trades that are in front of us. 60, 68 resistance, 21, 325 resistance, yellow line, S&P, NASDAQ. You guys know the drill. That's what I think is still up here. Boom, boom, boom. We're gonna get this today. We're going for day 4. I think this is day 4. Trade of 5. My payout, if I'm doing 150, so each of my payouts gonna be $15,000 every 10 days. So y'all can hang out. You can watch me get my first payout. If I don't fuck it up. All right, so we're looking 60, 68. Make sure that's on here. Yep, 60, 68 on there. Good. Liquidity maps, good. Good morning. Good morning. Good morning. Volume market says no change, 98% too. Thomas said, yep, no change in the rates. So that's Wednesday. Thursday is going to be more of a news day. We got GDP coming out. We have continuing jobless claims, initial jobless claims. This is going to be a little bigger, a little bigger part of the day. Like, I'm going to tell you something about the market and the economy. The economy looks great. Jolts are going up. Continuous jobless claims aren't going up faster. They're in the normal range, which means we're in a hiring spree and there's available people to work. The initial layoffs have been trending down this year, which is good. Less and less and less and less people. This is going along the lines of companies are desperate for work, which means wages are going to come down, which means inflation is going to come down. So CPI should come down on its own, despite what the Fed's doing, and that's only good for the economy. 5 150K accounts, which writes a $15,000 payout. Yeah, $3,000 per account, $15,000 every 10 days. or I think 4 payouts, something like that. And then the 5th one, I think it goes up to 35. They don't have uncapped payouts there, these straight to funded. But I'm sure at some point, before I even make it that far, they'll probably just promote me so I stop taking their money. It tends to be the usual trend with these things. You start doing, you do good enough, they get you the real account. Good morning. What's up? All right, let's go. Today's market brought to you by the letter M and the number 3. It sounds like Sesame Street over here. I think today we're going to be pretty chill on this day. I would like to buy a dip, clearly. Yesterday when we had monthly hedge pusher held on like a fort, held on like a champ, held the fort. Was pretty good. We didn't lose the entire market. We just lost a couple stocks, right? So the rest of the market looked good, but we need to see if the rest of the market's still good today. If that didn't spook everybody, because clearly you don't know. It's not like AI is affecting everything else, but if you have a margin call and you're very heavily set in Nvidia and you believe Nvidia is the future, you don't want to let it go. You got to let go of something else. Now, yesterday, people didn't let go of something else. The majority of the stocks stayed pretty good, but today we got to see what happens day 2, right? So in those accounts, I have to hit a 9K, I believe, profit target while maintaining consistency of 20%. And then I only get 3K of a payout after 9K profit every 10 days. So I'm going to try to get I'll probably have, if I do okay, I should have 20 to 30K by that first payout. Because my average is 1 to 2K a day. My best, actually, well, let me do that again. About 20K at the end if I have all winning days. If I have winning and losing days, I should be right on the cusp. So we'll see. That's cool. The straight to fundeds are only like, I don't know, $300 or $400 a piece, something like that. That's a good ROI if I take what is it, 1,500 and turn it into 15,000, 10x return. Not bad. So SPY by new all-time high by end of the week. I think SPY will be new all-time high at some point. But not this week. All right, let's see what we got. Welcome, guys. I'm gonna trade S&P today, not NASDAQ. Get a little bit of a slower pace. The risk interval update should update every night at 5:30, so. You have 5 minutes to make coffee, man. That's it. I'm so glad you guys come and hang out with this pre-market. I'm going to tell you. A lot of people that stream, a lot of people that talk about trading, but there's a difference between people that just trade. There's a lot of people out there that stream that do trader funding programs, spend a whole lot of money on them, make a payout. Why don't I tell you the trick they do? You guys want to know the trick? This is what some of your favorite streamers do. They go out there and they buy all kind of trader funding programs. They buy a bunch of them. And then when the day comes, like a day like today, they'll, they might have spent 2,000 at one and 2,000 at the other, right? And so you're going to see that like they'll go in long in one and short in the other. And one of them is going to pay out really big. And the one that pays out really big that puts the buffer in the account that gets you off of that trailing drawdown is the one they keep. The one that burns out just burns out. And they post about their big payment, then they have the easier time going. There's a lot of people that do that. And you'll know that they do that because they're always flip-flopping for whatever reason in sim to funded and staying in a bunch of different sim to funded programs at the same time. If you actually add up how much money they net out of all of this, it's not really much. There's tricks to game the system. There's a lot of people that do that. When you're here, you're going to watch something a little different. I'm going to commit to one and tell you I'm committing to one, trade the one. Do you guys know people do that? A lot of streamers out there do that. There's a reason they're not in live accounts. It draws a whole lot of money. But trade one up, trade one down. You can't do that if you have all accounts with one firm. You can't trade one up and one down. But somebody all of a sudden is trading one, like one of them for a while, and then all of a sudden the next day they're trading another one with a big win. You trade them opposite directions, my friend. And they're just posting the winning one. And they make a lot of money too because it costs a lot of money. You make a lot of money. Because if you make a certain amount in these funded accounts, you get out of the trailing drawdown phase. A lot of times trailing drawdown becomes a static drawdown. And so all you have to do is hit a home run on your first trade. And whichever firm gets you out of the trailing drawdown, you've removed one of the constraints to make it easier to make your payout. Make your payout, start all over. It's a super cool trick that a lot of these guys do. There's a lot of them that do it. I know they do it because I know all the signs. I do the math. I follow their profits and do the math. I know exactly how they do it, when they do it. I can reverse engineer their entire game. It's a cool game. You guys could do it too, as a matter of fact. Trade one firm against the other. They wouldn't care. They wouldn't know. So trade one up, trade one down for your own gain. You don't even need to have a stream or anything. You spend 1,000 here, 1,000 here, swing for the fence in both of them, and that first one that gives you 3 or 4 grand outside of your thing, and that first 5-minute opening candle. And you just keep those accounts, let the other ones bust out, and now you have an easier time at twice the price to get to your payout. You're not just hustling one. Game the gamers. But it all becomes a little dirty when all you do is post the wins from the account that's winning. We used to have a name for that back in the day. It's called fraud. But at the end of the day, I'm not calling anyone out. I'm just saying a lot of people do that. I've seen a lot of new faces in the streaming world. And boy, oh boy, do they do that. Look. Papa's seen all of it, okay? It's just cool to see, the younger generation immediately jump into, the fraudulent misrepresentation to build a stream. I've seen a lot of it. Now, I'm not calling anyone out. No. I'm not saying anybody. I said new people. New people. I've seen a lot of new people do it. Like newer streamers. I'm not saying any names. I don't name names. I'm teaching you guys. So do you be careful when you go out there. Anyone that rotates often, it's no consistent approach to that. But you have to just keep in mind that if you guys want to learn trading, you got to find people that are going to show you, committed to one thing. Like I'm committed to one thing on the stream. I'm not going to show up tomorrow and be like, by the way, here's my Apex accounts. I paused Apex. I'm doing Tradeify now. I'm going to rotate like every week or two into something new every week or two. But I'm not going to be like posting different firms every other day. Stop math, they're already dead. So, how's a lot to process? So let's get right with the trading. I'm just saying in general, there's tricks to game the system to lower your risk as a trader. But a lot of people discovered that all I have to do is show you the winning account and not show you the losing account, and you have more, you're more likely to continue to watch them. Papa's seen it all. Stop Matt, they're already dead. Are you young myself? I'm young enough. I feel young, but I'm in like my 40s, man. All right, let's go. Market's open. Market's up. 1 minute. Market's open. Okay, let's see what we get. Me trading S&P today. Right out the door. Let's see. Get about a second here for resilience kicks off. Let's see. Resilience is nice and good and clean. After yesterday's move, I expect the opening move to maybe be down to the downside. Nasdaq is already negative on res. That's good to see that. 60.26 overnight monthly hedge pressure. We did open above it and support against it, which is good. Let's take a look. Resilience is here. Remember, res less than 0, we go through the box. Res greater than 0, we go through the box this way. Let's see what we have. Looks like S&P is positive. Nasdaq is positive. Good. We should have support right there in the middle. Let's do QQQ really quick. Should I buy this dip? That's the question I have. Open blue open on QQQ. That's really nice. Let me give it a minute to stabilize. This is good if we do get hedge pressure bounces. Open blue open is always a trade. Open support is always a trade. They're nearby, so I should probably tap it with 1. Res is good, nice and strong, 20%. I don't hate it. 515, there it is. There's the dip. Let's hit it. Small trade. Right, the gap fill. Oh, look at this. Right at the bottom of the box. Careful on hedge pressure break, snap down. This is QQQ, so be very careful on hedge break. But SPY is good right here, but also hedge pressure down at the bottom. This is a nice, good long entry on Qs right here. This is a little abnormal to trade it right back to there. So again, I'm hitting it with 1 contract, nothing big. But just keep an eye out for Qs today. This is actually bad. Unusual to just plow through and keep going. Res is positive as well. So S&P filled the gap to the downside with positive res. That is a long entry. And I'm going to take a little bit of extra risk here. Let me put 2 on the table there. I'm going to do is, if it doesn't work out, with whatever reason, this is irrational on Qs, so be very careful. I'm going to stop out slightly below here at 599 and get out of the way. I'm going to stop out there, and I'm actually going to take a long from there to there if I get that dip. So that's about 20 points, 25 points lower. I'm okay with that. I'm very okay with that. Resiliences are positive. I don't hate that. So we'll see. I'm going to take about 1,500 of risk on this one. This is unusual, so be careful today. That was a quick overshoot, but I think we're good. I don't think we're in a bad spot. But very unusual today. Okay, let's take a look at S&P futures. That's not usual behavior. So I actually am a little worried about this, but let's see. Yeah, I am. Res just went negative. Okay. Let's take a look at Nvid and just see if there's a support there, because this was the Nvidia crash the other day, and Nvidia just fell right to MHP. Okay, this is not good. Absolutely not good today. This is actually scaring me to watch Nvidia just plow through like this. This could yank the entire market down. So with negative res, that just put a damper in my trade. At the high, we are not going above here. We're not breaking highs at the start of the day unless this thing cleans up. This guy and this guy. Not so good. Not so good. I don't like this anymore. But I'm still going to take the risk. I'm going to allow myself 1,500 just in case it does try. Negative res is flux to there. That's why he immediately fell straight down. So we'll see if we get anything good out of this. Open, back up to open is always a support to trade to. But boy, QQQ is just looking absolutely bad. We crushed through hedge pressure right out the door. Let me see if I get... I don't, man. I'm a little nervous about this, you guys. I'm not going to lie. That was pretty brutal. That was a little brutal. All right, let's see if we get something out of it. At least a half gap. Half gap is resistance, so this is likely to be... I probably should take some profit. I wasn't like a little wuss here, but let's see if we get all the way back up to open. Res is positive. It's a rally. I like this. Nvidia, hold the fort, baby. Don't go anywhere. Don't go anywhere. It's going to bounce around a little bit, so just be careful. It's not going to get a nice, clean rally. It's not going to be easy. This is the scary part today. I'm hoping that this turns around. If it doesn't, we break through here, then it's a pretty sizable fall, and then there's a trade right off of that. So Filling the gap is okay. And right there, this is bad. This is really bad. Shoot. Should I trim early? Nasdaq actually has a positive res, which is good. It's trying its ass off to hang in there. This is not good, guys. Not good. I don't actually like this anymore. I want to see some of the stocks doing good. So we're right on the edge, which is why I'm holding on. My eyes are just right here where I'm circling this box. The flux to the redistribution zone right here. Nvidia alone, again, is being kind of an asshole to us today. So Nvidia is yanking everything down irrationally again, which I don't like. I don't like this. So let's be careful here. QQQ hits MHP in just a second. So let's get off of SPY and let's watch QQQ today, because that's going to be kind of the meat and potatoes of today's setup. Now, we know from yesterday, that's what we're looking for. On QQQ, there's a nice little dip. That's the only reason I'm going to hang on a little bit further, and I might actually tap it one more time. BSU is a really strong trade setup right at that bottom there. Around the edge. So that's a decent setup right here. That's always a good play. Like I said, I'm going to be about 1,500 or so, give or take. By proxy, QQQ is going to hit its first bounce there. Nvidia is going to fill its gap right here, and we'll see what happens on that. Nasdaq Res has gotten slightly better, so this is good. We'll see what happens. Like I said, I'm down about 15 drawdown. That's it. Nothing crazy. But I don't like this setup as much as I see it. But I only took 2. Like I said, I did a small position right here. I'm gonna allow myself a little bit more room to play right there. Let's see if we get anything good. Res is deteriorating a little bit further. That's not the best sign in the world. What a day today. It went down before up, but that's what that's the first thing I said earlier, was that we would probably span that range. I don't think we're going to sell off and crash from here. I think we're going to span the range. So I'm going to hang on to this one. This is probably that area of support. This is that area of support, NASDAQ. DD band, I don't think we're going to break through, but we'll see. Just be careful today. Nvidia is getting a second round of selling, so this is yanking everything down today. I still have faith in the index, though, but we'll see if this is a residual worsening second day. That's what I'm looking for. I'm going to hit it a little harder right on the edge there. Maybe we get something good. Nvidia on the gap fill. Market's digesting this pretty heavily. So this is my high right here on the bounce. Take it. Right there. I'm just holding. I'm only doing 2, so. I don't think we sell off. I don't think we crash. But this is looking a little interesting here. Let's take a look at the sectors. And like I said, today I don't think we're as good as we should be. Nvid's breaking a lot of hearts again today. Tech is doing really bad. I mean, just in general. Utilities doing really bad. That's yanking everything down. But everything else is kind of mixed like you'd expect. Let's see what the other stocks are doing. Microsoft's okay. Amazon is okay. Apple doing really good. Apple's been doing good. Google. I think Google will probably be doing poor. Yeah, Google's doing bad. Meta doing all right. So it's a little mixed bag here. Looks like Nvidia is just the one that's stinking the bed today. All right. Oops. Where did my stream go? I lost you guys. Hold up. That's got to be a fluke on Nvidia today. Residual selling second day. Do you guys think Chinese AI is going to topple a company like Nvidia? We take a look at the liquidity map here. It's not the best sign in the world. There is no support on Nvidia. That's the sad part right here. We don't have much until bull zone. Nvidia could fall about to 115, so that could yank us down pretty hard, which is really scary. That's why I don't like. That's why I took a dip on this one just to get in, and I was hoping that resilience would stay positive, and it didn't. So stocks are going down through their gaps right there. So it's gonna just kind of hold on to this one about 1,500 if I'm wrong, about 3,000 if I'm right on this dip. If I get a nice little bump up. What Chinese AI? Chinese, isn't that what that is? Dick pic. The fact that a small company of 200 people can create an AI, that's why everybody got kind of freaked out about. Oh, S&P, come on. Hang in there. Let me see here. Let's see. Let's get Infid catches a bid here. Problem is, it's got a little bit more to go, and this has a little bit more to go. I should probably take some off the table here. I don't want to fall 20 more points. Yeah, let me trim. Take a little bit of a loss on that one. I'm going to take back in right about 597. I'm going to hit this right here. Like I said, just trim to half. I'm going to let this be the bounce. I don't think we're going to crash the market today on this, but at least there's a move there, I think. There's a move there, I think. This is getting slightly worse, so we're outside of the box. I'm going to kind of trim down just a little bit and double my position right here. It's about 15 points lower on one. Totally close to about 750, but like I said, I'm going to just trim a little tiny bit. QQQ bull zone bottom's the next step I want to see on that support. And MHP. So that's where I'm looking to get. All right. Let's see. MHP on Qs. There's a nice little bounce there. Wonder if just for a scalp I can take it. Right on Qs. I know I already have an ES position, but let's see what we get here. Final point, Q is likely to pivot through here. So this is what I'm looking for today. This is looking pretty solid. Like I said, Nvidia has just given us like a really, really nasty experience today. Should I tap it at MHP? I always tap it at MHP. Why the hell not? Let's put one on. Just right here, just one. One for the bounce. That gives me a total contract position of 2. We'll see if I get any kind of trade from here back to open. There is a little bit of pressure here, but we'll see. Let's watch Nvid again. Off to the side. This is just crazy. This just smashing through supports like it's not even there. I think that overreaction is just like so much, man. All right. Nvidia has like other other things it does, right? But like, you know, the AI craze is what gave it a lot of momentum. All right, you play ball here. Come on. And I'm going to be heartbroken if this market just completely falls straight down because of one stock. Come on, let's hit it. There you go. Let's not be mean. Let's not be mean to us today. Come on. You know what I'm saying? MHP, baby. Like, I'm worried a little bit, but I mean, it's MHP. I'm telling you, it's MHP, man. Let's see how good we do on this one. Open, orange, open, or orange to blue are both setups here. We don't get much. That's about all I can hope for today. With the stocks not playing ball, that's it. But 90% of days stay on the same side of orange. I'm pretty okay with that. I'm going to hang on to this one. At least for here, that's about a 50 points, give or take. Nvidia long-term chart. I don't like to look at the charts to like make decisions like that. I like to look at see what the position's doing. Okay, now we get the move 846. We have data coming out today, by the way, so be very careful. There's news. The CB consumer confidence numbers come out today. I don't know where I put that. Put the little guy there. This is today. 12 minutes. Oh, damn. Look at that. Up 400, down again. Nvidia just being like, let's see if it's the rest of the market and not just Nvidia, though. Keep an eye out. Res just got a little tick of improvement. That's good. It's not bad. Not bad. S&P just took a move. Take a look at SPY really quick. So bulls on bottom, always along, always a good setup. SPY taking one little, that's kind of what happened here. S&P is kind of taking a little bit of a dump now. Boy, this residual move is not good. This is not good. I'm feeling weight on this market from yesterday's move is having an effect today. Well, geez, there goes another wave. I still don't want to add to it. I'm going to display this volatility. VIX is breaking into a bull zone, so be very careful on this. And Nasdaq is finally down in its lower DD band. So this is kind of that bigger support I want to see on Nasdaq. So I'm good. I'm good. I'm not afraid of this one. I think we're good. Consumer confidence numbers come out pretty soon, so that's going to be a bigger move on the market. Let's take a look at what it previously said. Sweating a little bit on this one, but we'll see. It's getting a lot of momentum picking up here. Like I'm seeing the Nasdaq speed up a little bit. I'm a little nervous though trading into that news, but I am at the lower DD band. I don't think we're going to sell off and crash today. I think we're going to support. Inside of here, I think we're supporting to make our way back up to there. But like I said, we'll see. Not too worried. I think I'm okay. Let's see if we're the best to ever do it or we're unlucky. One of the two. I feel like I'm unlucky today. I don't feel the luck. I don't feel like the market's giving me some love. I don't really feel it, but bulls on bottom, S&P, bulls on bottom, Nasdaq, always a trade. Always a trade. Halo or DD float, that's a good setup on the long. Like I said, only position small on this. But bull zone bottom, always a setup with a pretty heavy position, a decent sized one. I always trade that. You guys know that the BSU, I trade from bull zone bottom to the halfway point between these two right here. And so the halfway point is literally here to there. That is the perfect setup. One of Matt's favorite trades, because I just tapped it again off to the side here. Got this DOM, shows everything. Right about here on this retrace is where that balancing act takes place. The S&P is just getting clobbered today. It's insane. How confident am I in this NASDAQ setup? This is just insane. Plus the news is coming out in a couple of minutes, so that's going to create a little bit of volatility. Dare I? We're at MHP. Hit it with 2. Let's go. It's Matt's favorite trade. I have to bet on the news giving me a little bit of run. I'm just scalping this little range here. I believe in MHP. In MHP, I've got faith under ideal conditions. This is non-ideal conditions. About 70% of days will close this way. About 90% of days will close this way. From here to there is my setup. That's this guy right here. I doubled down at the bottom. Oh, shit. Well, there we go. There's some money in my pocket. Let's put up NQ futures right here. Let's take a look at this. Where are we bouncing to? Where are we bouncing to? There's 2,000. Oh, I mean, I'll take it. I'll take it. I still got my S&P. I'm hanging on to that one. That one's still lower down, but I took that scalp on NASDAQ while we're waiting. Yep, that's it. No, that's it. It's just the halfway scalp on the bounce. So I'm going to let my S&P ride. I was doing that to hedge any downside loss on the S&P that I had. Okay, so I still have my normal positions that I'm hanging on to. Midway to open. Yeah, that was good. That was 2K. Now I'm still down a little bit on the S&P, but I'm going to ride it back up. So that was a pretty decent setup. I'm not going to lie. I'm very happy with that one. That was quick. All right, now I'm going to let the S&P one ride. I mean, things are looking solid here. It's pretty good. NASDAQ right to that edge is pretty much the end of the trade there. Let's see that bounce in the S&P, SPY. Not bad. I always, 90% chance, guys. This is why you guys come to Rocket Scooter. Check out this stuff. Open here. This is the setup. If there is any kind of bounce from here back to there with negative res, that's the resistance. Actually, the box is resistance. So this trade goes right to there and pulls back. I'm not going to jump in on the long here because VIX is giving me a little bit of a caution with additional what I have, but I'm going to let the one that I have ride. Yeah, we're still a little bit crazy on the VIX. Nvidia taking a little bit of a leg down here. What a kind of a boring day today. Let's get some more excitement. We get those numbers come out in a little bit. Consumer confidence numbers coming out. Let's see if we get anything lovely on that one. Guys, don't forget to hit that like button. You guys got to show the algo some love here. You don't mind giving us some love here. Bottom right of the screen. Help the numbers grow. Do me a favor. Oops. I mean to hit F5 there. Give me a second. What the heck did I do? Let me reopen. Let me hold on. Reopen my platform. I did something. Come on. Nvidia kind of hit a bid there. That's good. Keys are solid. I do like the S&P where it is, though. 80% of days, hold above hedge pusher here. Under ideal conditions, 90. Under non-ideal conditions, 70%. These are our back test probabilities. You guys ever checked out Rocket Scooter before? These are all our back test numbers. Probabilities of those setups. I took the long out the door, scalped NASDAQ to bring myself profitable, and now I'm just holding on to my original S&P trade to see if it goes anywhere. Resilience is really nasty, but NASDAQ is starting to make a fight for it. So at minimum, this is my target. Negative res is resistance from there. So retrace back up to open. I might just close this out. We'll see. We'll see what I get out of it. Ooh, ooh. Baby, we're going to kill it today. I have a feeling we're going to kill it today. Just inching along, trying to make 1 to 2,000 in these Tradeify accounts every day. When I mix the NASDAQ plus the S&P, and this one is up about $500. But while being down 500, the two trades together is up about 500. So when this thing goes down to minus 1,000, then I'm breaking even. That was a nice steady band bounce on NASDAQ, so that was really good. NASDAQ's back up to half gap right here. So this is the first resistance point on NASDAQ, right here. So this is going to be the problem area. We're going to see some pullback here, unless NASDAQ just somehow finds a way to get a lot of momentum from here. That's like the retracement. I just closed on my NASDAQ position a second ago. On that retrace. Check VIX really quick. VIX is good. Okay. I don't think that's terrible. Take one more look at NASDAQ here. Looking good here. I like it. I like it. I love it. Let's get that run, baby. Let me right up to half gap there. Wait, 121 people like the stream, you guys. I'm gonna have to go over in the other room and cry. Let's get 350 people. Click that thumbs up button. You guys are getting some free knowledge bombs. You guys get to watch me trade for free. I get to sit here and sweat blood and tears for you guys. Gotta give us some love. It's a thumbs up, bottom of the screen. I will outtrade any person on YouTube. I will outtrade any 2 people on YouTube put together. I will outtrade any 3 people on YouTube put together. This is the best ever stream, guys. Like, not even by far. There's not even a close second. Not even a second place. They've eliminated second place. There's no one even close. In the ranking, it goes from first to third. That's how it goes. There's not even a second place. They don't even have that ranking there. It would be I take up both of the rankings. First and second. You kidding me? Popping head on these trade fives, baby. Ooh, I'm up about 1,000 or so in each account now. Let's get that run to half gap. Let's see if we get the good bounce rally. NASDAQ breaking through highs. Ooh, feeling good. I only got 1 on this account, but I got 2 and 3 on these other ones, which is good. Daddy got to make his couple thousand a day. I can't overdo it because I got consistency rolls. Got to hit those consistency rolls. Half gap is it. Couple more ticks on this one. We got to close out at half gap, technically speaking, when res is less than 0. All right, let's pocket a lot of that. Gotta love it. Like I said, we aim for about 1 to 2K a day because we have consistency rules on this. Daddy made his money today. I got no complaints there. Like I said, you guys, you watch anybody else, you're wasting your fucking time. Like I said, I got to make 1 to 2K a day for the consistency rules. That was a quick $5,200. I mean, that almost covers my mortgage. Well, almost. Nah, not almost. Most of it. The majority of it. That's it. Don't be doubtful on the B balance. These are all 88, 90, 100%. I gotta take all the profit there. So let's close that one as well. Look, guys, I'm gonna tell you something. You watch anyone else, you're wasting your fucking time. No doubt. There's no doubting anything. I don't doubt anything. Well, I doubt everything. I'm doubtful of everything. But I have degrees of doubt. Ready? 90% of days, balance right there. MHP. 92% of days, stay above here. 80% of days, bounce right there. 70% of days under non-ideal conditions, bounce in there. It's 90 under ideal. This is like, babe, come on, baby. I bought 2. I didn't like it because res was negative. I trimmed to 1 and I held that 1 because I told you guys yesterday when I positioned down, I know the only reason I'm not making more money is because I can't. I've got consistency rules. I have to stop between 1 and 2,000 a day. I can't trade more if I wanted to. That's not how you game the system here. You have to inch your way forward. I'd love to make a little bit more, but it's going to make me have to trade more days. Change account. Well, I got all my accounts traded in the same trade today, unfortunately. So they all held. Now, here's the thing, right? Let me detail the trade. If you guys missed it, it was too much. I was sweating it a little bit, but you know, I still have faith. I drew these numbers here for a reason. I logged 2 right there and it started falling. My normal is 10. 10 is my maximum that I'll do. 2 is like my average small trade. I didn't like because res was negative and Nvidia was collapsing through support and everything was looking bad. So I subtracted it and I made it to 1. And I held on to 1 and I said exactly the same thing. Instead of holding 2 for 20, I decided to hold 1 for 20, which is about $1,000 of loss. And since I got in my entries here and took a loss immediately, I told you guys how much was I going to lose? About $1,500 a drawdown. That's it. Now that makes my overall trade less than 1-to-1, but it's okay because when the market goes against you, you got to be careful and just trim your position. So instead of stopping and entering again, I decided to cut the position in half to give me twice the stop. We covered that in yesterday's class, right? So if I got 2 contracts for 10, it's the same thing as 1 contract for 20. Because NASDAQ had very, very, very strong pivots nearby, NASDAQ had MHPs, DD bands, and NASDAQ was falling very quick on the irrationality of an MHP here on QQQ, the irrationality of Nvidia. I just decided to hold on to S&P as NASDAQ would hit here. And right here, I scalped NASDAQ once in and out. This one I just held through it. I bought, trimmed, bought, closed, and that was about worth $5,000 something. And so my one S&P contract I held right up to half gap, which I trimmed there because resilience was less than 0. And guys, I do the same thing every day. Why not trade my own live account? I do trade my own live account, but I also am supporting trader funding programs more because I get more viewers. Let me tell you, I traded my live account, right? And I do trading challenges. One time I did a challenge to take half the margin requirement. I started with like $6,700 and traded it right up to 100K live on stream, and I won a 75-day win streak. It was incredible. But you know what? The stream tripled in size once I started doing trader funding programs because all you kids do it. So me being the only fucking guy in town that trades a real account, nobody wants to watch that. It didn't matter how much money I made. Nobody wanted to watch that. Nobody, like 90% of futures traders want to see you trading trader funding programs. It became and we had debates inside of our leadership on what we should do with this. And we're like, we got to jump on the bandwagon because what everyone else is doing. So I'm not going to lie. I got a bandwagon what's popular. You got to stay relevant in the space. So that's the sad part. I trade a real account. I've always traded a real account. I still trade a real account. But, you know, we get thousands of views more with trader funding programs. It's just the way that it is. So. Hey, when does that Trading View contest start? By the way, if you guys are just tuning in, let me tell you something cool. Yeah, so the idea was nobody really cares if you trade a real account. They want to see you trade 20 accounts at once. It's just daily. So last trading contest I did, ETF Global Monthly Futures Trading Competition, I got first place. I usually get in the leaderboard in these contests. Your Trading View has a contest right now. So let's get some rockets in chat. You guys want me to go win this Trading View contest? You want me to go beat everybody there too? Let me see. How many people want me to do the Trading View contest on this stream as well? You want me to do it? You want me to go win this thing in the honor of Rocket Scooter? Hold on. Trading View Leap is what they called it. Let's see. Join the Leap. Let's sign in. Let's join. The balance on that account. Okay, let's do it. The balance on the account is same for all participants. 250,000. The commission for everybody is at 0.0004%. The margin is 5% per contract. Yada, yada, yada. You must make at least 1 trade per day for 10 days. The competition starts February 3rd, ends on February 28th. I've now signed up. You guys want to see me? Y'all want to see me go win another trading contest? See, here's the thing. I peaked at the top 5 in the Robbins Cup. If I were to guess, I made it in the top 20. I stopped caring halfway through the year when I found out none of the other gurus entered. Everybody was talking about entering the Robbins Cup. So I entered to beat everybody. They were all photoshopping their names and stuff into the leaderboard. So I said, all right, I'll go in there and beat everybody. Everybody that you guys know. All the streamers, all the whatevers. I'll go in there and I'll win. And when I found out nobody really entered, I just got tired of trading an empty contest because nobody really trades the Robbins. It's a couple hundred people that trade that contest. It's not really that big. So it didn't make any sense to not focus on what brings in the viewers, to trade a contest nobody cares about. People would have cared about it if I was beating your guru and your mentor and all those people that are on social media. That would have drawn a crowd for me to say, look who I'm beating. But I had to make a strategic decision on that one to join. Why my glasses are like not getting clean? I swear to God. I'm trying to clean them. So get on that Top Step leaderboard. That's what I'm going to do this year as well. So Top Step, I'm giving attention to Tradeify for a little bit, and then I'm going to give attention to Top Step after this. But the reason I don't jump back and forth as quickly as, you guys want to see is because of the shenanigans. Here's how these gurus game the system, okay? Like I said, they will go spend $1,000 at Apex. Literally, this is what they'll do. They'll go spend maybe like 2,000. They'll go spend 2,000 at Apex, okay? And they go spend, I don't know, 2,000 at, name another one, Tradeify. I'm just gonna make another one, okay? If you see somebody that one day it's Apex, one day it's Tradeify, one day it's Take Profit, one day it's ETF, and they always seem to have profits from each one of them, let me tell you how the game works. Let me tell you how to game the system. Would you guys like to know how to game the system? You ready you'll kick my ass at a trading competition? You probably will. Easily. You want to know how they game the system? Let me teach you a trick. At the start of the day, in the first 10 minutes, you have the highest probability of volatility. This is mathematically statistical in your favor. If you have tens of thousands of dollars to waste, you can make hundreds of thousands of dollars with it. Ready? Okay, so you go in at the start of the day, you prime up 20 accounts in one place, you prime up 20 accounts in another place, and all you do is right out the door, copy trade long on one of them, copy trade short on the other, and they're two different firms, and each one of these accounts is a trailing drawdown that really burns you out until you get to a certain point and the trailing drawdown becomes a static. They're almost all like that, right? So all you need to do is go in as hard as you can. I'm talking 5 to 10 contracts. If you see anybody trade like this, they're gaming the system because I figured out how to do it. I don't do it, but I figured out how to do it. You burn a lot of money to get a big payout every once in a while. You lose a lot of that to the money you burn and a lot of that to taxes. You don't really net a lot, but it's a good trick to actually make money doing this. All right, so you spent maybe $3,000 or $4,000 to prime up all these accounts. You hit 5 to 10 contracts in both of them. Apex you long, Tradeify you short, whatever the case may be. One account, all 20 blow up. If you lose 3,000 or whatever on Apex, let me give you an example. If your drawdown is 3,000 and your profit target is 6,000, I'm gonna make up something right here, then as soon as one of them hits minus 3,000, the other one's up 3,000. You blow up 2, the other ones are halfway there. At some point past the buffer, you end up getting a static account. You're halfway there. And it makes it easier once you're halfway there, especially if they're static or end of the day drawdown accounts. That buffer doesn't trail your stop until the end of the day anyways. So now you have a buffer. Imagine if it's Tradeify, right? You blew up 3,000 Apex, you made 3,000 Tradeify. On the end of the day drawdown on Tradeify, which is a $6,000 plus the 3,000 you've made, you have 9,000 fat in that account already. And then the next day it turns back into a 6,000 drawdown. You are, with $3,000, a third of the way to payout. So, and then all you have to do is post the picture of the one that you won to draw a crowd. And so, you can do this and burn out all these accounts. But if you trade one against the other one's halfway there or even halfway to the point of losing your trailing drawdown. That's the trick. If you can burn out that trailing drawdown and get it away from your account, then you are in a static account with basically no risk of fucking up. Unless you're just dumb and bad at trading. But that's what these people do. They trade one up, they trade one down with different companies. You can't do that in the same company. You do it with different companies. So like I said, if your guru is posting gains here, gains here, gains here, gains here, they're just flipping between them and they're playing the system. It's a smart thing that they're doing. It's not honest to you guys, but it's smart what they're doing. You can make some money that way when you first launch your account to just play them this way. But if you only show the picture of the one that goes up, you're kind of in a... You know what I mean? You got to show all the blow-ups too, but whatever. So for me, not jumping around between different firms, I think it's shenanigans, to be honest. I always say I'm giving a certain firm focus, right? And I make the announcement. Like I said, I was doing ETF for 2 or 3 weeks, and then Apex for a little bit, and then now I'm gonna do Tradeify till I get the payout. Then after Tradeify, I'm gonna do Top Step. Just to circle around, baby. What a good day today. Like I said, I need to target between $1,000 to $2,000 of profit today. per account because I have a $9,000 payout on 10 days. That's roughly $1,000 a day to meet consistency. 1 to 2,000 is the limit. I don't try to go over that because, you know, that's the way the game works. But there you go. You guys like that? Ooh. All right, so I'm in that trade view competition. So whoever said they're going to beat me in a contest, you should. I want people to beat me. I've been looking for traders that are better than me. It's just hard to find them. Yeah, it really sucks that the industry is kind of shifted towards that for newer traders. I mean, not sucks in a bad way for me, but sucks like for like my career because I support it. I don't not support the industry. But for me personally, I make less money trading in trader funding programs, but I have to do it for the relevancy in the space. It's crazy, right? It's not, if you're a real trader, you would never choose to do this. The only reason I choose to do this is because people watch me. If you guys didn't watch me, I wouldn't touch the things with 10-foot pole. Nothing bad with it, but I'm just advanced beyond the necessity of needing those. I would fund myself as a trader and make more money that way. It's the only reason I do it because people watch me do it. And you guys do it, you need examples. And it's harder, so it's fun to do something harder, even though I purposely am making less money for your entertainment. So the idea is that, you know, with the constraints you have to trade with, it makes it harder to trade. Doesn't make it easier to trade. And so why would any trader subject themselves to anything harder other than the viewership? And that's kind of the point. And also to teach you guys how to navigate in the system, because it's a little bit harder to trade here. You need a little bit extra guidance on rules and rule sets, position sizing, things like that. Good morning. What's up, Matthew? You joined this morning after a very rough day yesterday. This morning's session was just what you needed. Truly appreciate it. Hey, man. Oh, wait, Matt, are you in our program? Have you taken our classes? You had a rough day yesterday? Like you were trading yesterday, bro? It sucks. You have faith in Rocket Scooter. What's up, Jason? Thank you, man. Appreciate it. So less people watch your account when you were trading your own cash? Yeah. A lot less people. Because everyone is so glitz and glamored by the 5x, 20x accounts. It's like that makes people... Like when somebody can roll a base hit of $500 times 20 and it's $10,000, it looks so much cleaner than making $10,000 in one account. It's the same amount of money, but the flurry of green is a psychological thing for people. Is there a chart set of video? Yours looks nothing like, what do you mean? Oh, okay. So I just have two different charts open. So Lyndon, if you do this, if you go to your chart and you click this button right here, I'm circling it. You can pop out anything that has that on it. You can pop that out, pop that out. You can pop that out. So I basically pop out other charts and just have them side by side. Cozy Vibes, saw us on YouTube a couple weeks ago. It's been a game changer. Appreciate it, man. See how you see the monthly maps. So, Matthew Davis, I got to tell you, man, you need to come to our classes, dude. We train people on betting techniques, and this is going to be something that hopefully can give you some insight. I'm going to tell you, I had a rule that had me sit out yesterday. From the start of the future session. Now, we have indicators that tell you the markets are going to crash. Dude, Matt, you got to do this. Okay, look. Everybody convince Matt that he needs to come learn DD bands stuff. It's okay. And here's what we did. Our classes are dirt cheap. We don't want to sell courses, right? Biggest training program ever for futures traders. It's $999. No, I'm kidding. It's $20. It's $1 a day for 20 days because we don't want to charge for it. It's $1 per class. And it's a 20-day boot camp and we teach everything. It just supports your journey or anything you guys want to do. I joke when I say it's $1,000. I see people sell courses for $1,000 and it's like charting courses and stuff. It's really cringy. So we wanted you guys, the only reason it's anything is so that you guys take it seriously. If it was free and we had a whole bunch of freebies come in here and take the class and they go out there and they didn't pay attention and then they just talk shit and like, it didn't work or I hated it. That's because they didn't assign themselves. So we charge $1, you'll take it seriously and you'll really study the stuff. It's a perception of value thing, which is also the theme of the class when it comes to profitability and trading. So, so the idea is you guys come to the class. They're usually free if you're using our platform. So I'm the CEO of the Rocket Scooter trading platform. It's a futures trading platform that we made that uses positional risk analysis rather than technical. It's a whole different style. And we have rules that tell you when the market is unusually behaving. Yesterday was a sit out rule from the start. As a matter of fact, 5 minutes after market open, I'm posting, hey, I'm going to go get steaks. I'm out for the night. And so I avoided the crash like the plague yesterday and even matter. So we have these bands based on margin requirements, and it's something cool. This indicator is automatically populated on the chart. When you break these bands overnight, it's an automatic sit out, and NASDAQ gapped to that level. I was literally sitting out from 750. That entire crash, I lost $0 on because my indicators are that good at market avoidance. So if you're a trader that's struggling, these are the things that are missing from your diet. One thing that you do as a trader that's making you do bad is you're shorting the market too much because markets tend to go up the majority of the time. I give you all the stats for that later. Number 2 is you're betting too big for the risk you're taking, which is most people. Number 3 is you lack a market avoidance strategy, which is rules to sit out. I usually only use my stuff in a certain constraint of parameters that lined up. Did you know I have an 80% win rate when I trade? People here can testify to that. If you guys are just tuning in, everybody here that has seen my stats or seen my contest stats, I don't trade that much, but I'm the kind of person that doesn't go for win big, lose small. I win a lot and I win small, consistent trades. I actually win about 80% of trades. So the idea is there's 2 different kinds of traders. You either have a really good system that can identify something that works most of the time, and then you just hit base hits all day long and keep your positions small that you never blow out. That's my style of trading. Very few people have that because very few people have figured out the market. So the other kind of trader has about a 30 to 40% win rate, and they just let their winners ride till the end of the day, and then they cut their losers small. That's not my style of trading because I don't like to spend a lot of time trading. I like to be in and out really quick with high probability setups rather than that. So the idea is that I have an actual exploit that under certain conditions works most of the time. On paper, we have some of our setups are 90%, which is why I'm able to hit 80% win rate usually. And if you guys don't want to take someone's word for it, please don't. Let me just show you, even in a trading contest that I did, I save everything. I actually tweet everything. Here's the stat. So this was the trading contest. So under the pressure of a contest, under the pressure of trading in front of people, I even started the contest 9 days late and I still won. My P&L curve was this. The win rate was about 80%, which is pretty normal. 70 to 80% in most markets. I sit out a lot when markets are selling off. I usually do about 90% long trades in all environments. Now, the reasoning for that has to do with longing the market's just statistically favorable. And when somebody said, if people could actually trade, as Trade Writer said, 100% profitably, you would realize that nothing beats your own trading account live and taking money out at the end of each week or month. Nothing beats your own trading account, taxes alone. Sim funded is going to be paying you $10.99. You're going to lose the majority of it to tax unless Trump gets rid of the IRS. So the majority of your income in these trader funding programs, not only do you like a 10% profit split, but you're going to lose 40% to taxes. You're left with a net of 50% minus what you paid to get funded anyways, which could be another 10%. You could walk away with roughly 40 to 50% of your profits in trader funding programs. Nobody that's making money would do that permanently. The only reason I'm doing it permanently, because the money that I lose trading, I make up for with my other endeavors. So clearly it's a profitability approach. The bigger audience is more profitable than trading my own account on stream. So clearly there's a financial choice for me there. But the idea is you're 100%, Trader Raw nailed it. Like literally wouldn't be doing anything other than my own account, but you guys would be bored to death if I wasn't out there pumping these trader funding programs as part of the game. Do I provide training? 100%. That's all I do is provide training. We train traders. Everybody here that's practically been through our courses, they tell you there's not even a close second place. I mean, the reviews by themselves. People, I always like sharing the reviews. It's really flattering how much you guys support our group here. We teach you betting techniques. We're probably the only people in the world that do that, which is probably why you guys love the class. For most people, it's like I show you something under the sheets, baby, you've never seen before. And that makes people happy because everyone goes and tries to learn trading classes or try to learn trading, right? And it's always like charting classes. It's a bunch of bogus nonsense. Like you can learn charting for free with like a bunch of YouTube videos. This is a class on betting correctly in market avoidance and also ways to view and perceive the market with tools you didn't even know existed. People come in here and say like stuff like game changer, worth every penny. I mean, it's all 5-star reviews. These are actual people that purchased. This is what they bought. This is a lifetime member, course member, monthly member. Edge and market, trust me, there's massive value here. Amazing, one of the few trading products worth it. Been with them for 3 years, unlike any other. I mean, best dense trading techniques I've ever seen. This is graduate level stuff. You know, my background, I'm a mathematician. I have a degree in chemical engineering. I used to work in the oil and gas industry and the chemicals industry. I've done substantial research in my life. I've been programming since I was 12. I mean, I'm like a data miner. I'm a math nerd. So our approach to this is a little more sophisticated, but the techniques we give you guys are easy to learn. Underneath the hood, it's a little more sophisticated than what you're used to. We invented a whole different type of analysis, a game changer for my futures trading, deep knowledge of market mechanics. I mean, it's pretty cool what people have said. Listen, this is an honest review. There is nothing out here like this program. If you're a new trader, this will blow your mind. You guys have been so cool, like with what y'all said. And these are people, this is a member stuff, and like these are the reviews. So we put a lot of effort into our program. Let me teach you guys some stuff. These green bands on the screen, 88% of days will close in between these bands. 4% will close above, 8% will close below. This was half the motivation for me to long. There's a $5,000 decision right there. This has to do with the margin requirements in futures. You didn't know their most important number as a futures trader. I'm about to blow your mind if you do it. The S&P, this blue line, 80% of days will close on the same side you opened on SPY, 20% below. Under ideal conditions, this gray box, 90% of days will close on the same side as well, which means these are really strong supports. Today was non-ideal conditions, which roughly is about 70%. But as the market was dipping, I wasn't sweating. I actually loaded up right there and turned my loss into a win because of these high probability setups. And so the idea comes that this is exploiting market makers and their hedging. There's a reason I smile when I tell you guys what we do. We've actually created an exploit, and there's a reason our stream went from like 50 people to like 400 people in the last month. You got to tell all your friends because we actually have stumbled onto something. We've created a whole new school of thought to go with it. And hopefully, you know, we've given you guys something good. The only reason I'm not writing this further is A, resilience was negative, so I cut out here, and B, I can't make any more money on these Tradeify accounts because I'm locked into consistency rules on these things. So if I were to hold and make 3 or 4 grand, that sounds all fine and dandy, but then it's going to make me have to trade longer. So the funny part about trader funding programs, especially the Tradeify, what I try to do is get funded at each one and pass. So I got funded at ETF, then they switched me to live account, and I traded that live account and went straight to $15,000 payout. Very first couple weeks of doing that. Now I'm doing Tradeify, straight to funded. I'm on like day 3 or 4. I'm almost halfway in the profit target. I have to do 10 days of $9,000 profit target with a 20% consistency, which means if I make 2 grand a day on 10 is about 20. That's enough to hit the buffer, and that's totally fine. I can't make 4,000 in a trade on a $9,000 profit because I'm at, 40-something%, right? Okay. So the classes that we do is a boot camp. Each class teaches you a different kind of technique. We teach this one. We teach this one. This is a 90% pivot on QQQ. We teach this indicator, which helped me decide to trim right here and to add back right there and trade right there. That's all this one. This is an arbitrage indicator that tells you SPY is lagging behind the stocks trading in their gaps, their redistribution zones. A lot of things you've never heard, a lot of these terms, which is good because this is going to be so you're actually going to learn something new. And so we were like, let's teach everybody this brand new method we invented. Charting is obsolete. Candle patterns obsolete. We don't do any of that stuff. I don't use indicators. I don't use trend indicators. I don't use VWAPs. I don't use volume profiles. I don't use any of that stuff. I don't even change the time frame of my chart. I don't even look at a daily chart or a weekly chart. I've never changed the 1 minute chart. I've got all the liquidity measuring instruments I need right in front of me, and I'm good. I trade just on liquidity and high volume pivots. And so we, people that bought the platform, we decided to train everybody on all these techniques for free. So if you're a member of our community, the classes are free. And all of a sudden people were like hearing the buzz about the classes as the stream started getting bigger. And they were like, how do I get on these classes? I'm like, well, you have to buy the platform. It's $200 a month. And people were like, oh, it's a little steep. So we said for Black Friday, we'd sell it for $20 so that everybody can get in and take it. And everybody got in and took it. And it was a raving thing. As you read the reviews, everyone was like, oh my God, Matt teaches this boot camp and it's so awesome. We love it. And we decided to keep it. So just as a general, it's $1 a day. I'm not making any money off of that. And all the money goes back into the company to build the platform anyways. So I see you guys paying money to learn stuff out there. And it's very expensive for a trading education. And my goal was to not make it so. $1 a day is pretty much nothing. So the idea for you guys to take it, we'd love for y'all to check it out, is Wulong Abba says 46% of days are red. Yeah, isn't that crazy, right? You've seen my videos with mostly wins. Guess about 80% is the right number. I mean, I do have bad months and bad weeks. Like December was not the best month for me for sure. But yeah, like when I'm on in a nice good clean market, I can hit 60 to 80% consistently. My lifetime average over the last couple of years is roughly 70+%. And you guys watch it on the stream. I mean, 20 days overwhelming. I'm a bit lost with keeping it thinking 40 day, 60 day. So again, market, don't think overwhelming. It's just a lot of information. And the thing about the stock market is that there's a lot to learn. And the idea is you want to be a trader, you need to commit to learning something. The weirdest thing I ever thought about trading, it's as follows, right? Imagine that I woke up one day and I said, gee golly, I hate my job. I want to be a day trader. I see people making money. I could learn this. Let me just go push a couple buttons. I just long here. Hey, I made some money. Whoa, I can do this. That's like me walking up to you in an alleyway and stabbing you with a knife and thinking, oh, I could do surgery. That's it. I just cut the guy open. I could be a doctor. Huh. I can do this. All right. Let me go watch a couple YouTube videos and I'm going to open up a surgery clinic right here in this alleyway. That's good. All right. So this is what most of you guys sound like to me. A person that's been doing this for 15 years. I smile and I'm like, I roll my eyes and I'm like, it's cute that you guys think you can do what I do. And I'm like, how many people trade for a couple months and like, I think I can do this. But how many people didn't put 10 years into an education or 10 years into like life-altering, grueling training process, residencies and things like this to be able to do their career correctly, right? So it's kind of like when I hear people that are like, yeah, I've been trading for like, 6 months and I think I can do this. And I'm like, I know, but you won't be doing it for like 5 or 10 years. You got to go through any kind of mastery program is going to take you 10 years to master it. I mean, this is the law of mastery. It comes the idea, what do I do differently that you guys do that you saw today was you didn't see me lose my cool. You didn't see me lose my confidence. You didn't see me act clueless what was happening. I was announcing every move I was making. I'm going to trim. I don't like this. Nvidia's flushing. This is kind of weirding me out. I said all that stuff, but I still have confidence that we're going to hold here and hold here. So when we tapped, I switched to NQ. I longed NQ at the exact moment I needed to. I hit there, came down, hit there and took profit. Just like I'm supposed to. And the rehearsal of those techniques comes from just years and years of practicing. And so when people are like, I think I can do this. I'm like, you can, but there's a whole different layer in that skill gap between like, it takes about a week or two to get 75% of the way there. It's great. In about 1 or 2 weeks, you'll get to 75% of where you need to go. It's great. You're going to watch some videos. You're going to learn all the buttons. You're going to learn what to do. It's going to take you 1 to 2 years to get the other 20% to put you at about 95%. And it's going to take you 10 to 20 years to get the other 5%. That other 5% is actually where profitability lies. In the first 95%, you're not going to be making any money. You need to be like a savant and best in class at this to beat people, because you are trading against people who are best in class. No offense, you're trading against me. And there's a million people out there better than me too. These people that put in to an overwhelming amount of education and studying are the people that are consistent at doing this, because it's just like, you can say med school is overwhelming, but you don't just walk up and become a doctor because you stabbed a guy with a knife and I can cut people open. This looks pretty easy. Oh, you look sick. Here, take these pills. This should help you out. Man, I think I could be a pharmacist. You know, like, to master anything is an overwhelming process, which is the whole point I try to drive home to people. It seems easy because there's not a lot that you do. But it's because there's not a lot that you do here. Click, click, click. But there's a lot that you do here. Just like doctor walks up and says, you know, once you take these pills, you're good. He didn't just throw something at you. He cycled through hundreds of scenarios, analyzed every possible case of what you're dealing with, the data set he knows of what statistically people deal with, what kind of side, conditions you can have from this, and like everything, knowing your history, knowing whatever going through. And it's like, he just says, here, take these pills. But you don't realize there was 100 things that back that decision, right? The expertise is something that you don't see because I'm not letting you hear all my thoughts. And so you have to be trained into that degree of getting to where you're in the top 5% of doing this, because you're not going to make money unless you are. And so, as somebody said, years and years of losses and some wins, Rocket Scooter changed your win-to-loss ratio and your ability to sit out when you had FOMO. I love hearing that, man. I love it. Is the S160-100 today? I don't think so. I wouldn't bet on it. I think today the market needs to relax and stabilize. I don't think we get a big dead cat bounce. Remember when I drew this morning, right? What we were going to be doing? That the market was going to like stay inside of here. I would expect to stay inside of there. Markets don't forget crashes, you guys. So don't be too eager to V this back up. Like I said, it's not investment advice. Markets don't forget crashes. At some point, it's going to want to do something like that before it goes. Okay, so just be careful. This is the number one rule I can always tell you is the market doesn't forget a crash. Crashes like this tend to have created scenarios of like 3-day margin calls. Within 1, 2, or 3 days, there's always a second act to the play. Almost always. You got to be careful. All right. Mr. Clutch Doll Spence here. I really love that you're helping spread the word, man. We really, honestly, I get tired of seeing people sell things like charting and magic candle patterns as like, this is how you're going to make money as a trader. The only way you make money as a trader is by betting, right? And I tell people this as well. You can say, I'm playing poker, and if they deal me a royal flush, I'm going to win. Well, if they deal, it may get dealt a royal flush, they're going to win. You don't have any skill to do that. The luck carries you in that trade. But it's the winning poker player that can win the pot with a pair of sixes that really made them win. It's all the analysis that goes into betting correctly. It's not the hand that you're dealt. It's how you react to the hand that you're dealt and how you play against the other players playing against you. That's what you're doing in trading. You're playing poker. And it's all about the size of your bets relative to the risk you're taking. This was such a high probability trade. I hit it with as hard as I'm willing to go in these accounts. Two, I told you guys, 2 contracts NASDAQ. I'm sorry, 2 contracts ES. Sorry, NASDAQ is my max and 4 ES is my max because I have to inch my way forward in these trade-ifs. So you guys saw me 2 contracts max, right? I didn't even go all the way to ES. But why do I choose that? Why am I navigating to such a fine-tuned degree to win these trading funding program things? It's because there's a whole lot that goes into that decision. But we teach you guys everything here. I thought Elliott Wave was very overcomplicated. I mean, think of it like this, right? Any technical analysis takes price, which is a set of data, right? A set of data. And then it takes that data and then it puts into some math equation. Okay? It just crams all of this data inside of here and then creates a new data set out of it. It's like It's like if you take, you know, cookie dough and you add green food coloring to it, you end up with the same thing with something new. When you add green food coloring to it, it doesn't invent chocolate chips for the cookie dough. But technical analysts say that it does. They say, because I put my data into some kind of function, an indicator, a moving average, a VWAP, whatever, somehow it creates something new from that existing data. There's something wrapped up inside of this data that I've uncovered, some magic sauce because of the history of this data. Elliott waves, harmonics, the worst of all scams in trading. This thing's the shape of price. I mean, that's colors and shapes didn't make you money when you were 4 years old, okay? Pick out your crayons. You make money in daycare. It's not gonna make you money when you're 40. This is completely stupid. Like, people that sell harmonics are the biggest, and Elliott waves, the biggest scams out there. Absolute scams. To say that it's like as a mathematician, I cringe at this. Here's cookie dough that we added some food coloring to it, and somehow there's chocolate chips hidden in that cookie dough you didn't know. Somehow the shape of price has some kind of hidden data at certain places that can tell you a predictable move for that price. Somehow there's inferable data within this data set that's hidden that somehow I can extract hidden information and create something new. The cookie dough example always makes you go, wow, this makes a lot of sense. Exactly, as a mathematician, this is a way to explain data entropy to folks and the easiest way to understand. You understand the cookie dough recipe, right? There's no way you're gonna invent chocolate chips that didn't exist. There's no way you're gonna invent some kind of information that didn't exist by throwing the candles as an input to some kind of formula. And somehow the output has some magic to it. It makes no sense in math. I advocate for that online, and all these people will get all buttered. Well, man, why you doing us like that, man? I mean, come on, don't you support other educators out there? I'm like, as a mathematician, I don't care that I have a business to run. I have a business of truth, and the truth is, as a mathematician, anybody with the slightest bit of understanding of mathematics would cringe at what traders have put together as what they call edge, which is the weirdest thing in the world. Somebody said, I did not see profitability personally until after 3 years of almost daily looking at charts. You lost so much on options figuring out with futures. Glad to hear that. So you just have to understand that you have to take a degree of mastery when trying to learn trading. The way that you learn how to do this is it's a style of betting. We give you so much information. It's designed to give you a psychological overhaul. It's not just an education. Our boot camp is designed to rewire your brain. It's patterned after those kind of boot camps you go to that break you down and restructure you and you come out standing taller. I patterned it after that because I've gone through something like that in my life, and it's changed how I think about the world. The first thing we do is prove to you that what you're doing is stupid. And we say it just like that. What you're doing is dumb. And the idea is that we convince you that you're nowhere near your goal, because you aren't. You might think you are because you had a good month or a good week. You've been doing this for a year. You're nowhere near your goal. You're about a decade away from it, which is the truth. Statistically, the truth. Actually, about 999 out of 1,000 of you will quit trading within 6 months. That's a fact. Roughly 1% of 1% of 1% of you will make about a six-figure salary doing this. That's a fact. So the idea is that's what we got to work with, training a bunch of people. Doesn't mean all of you can't be in that 1/1000th of a percent, but you're going to have to put in the work to get there, because there's a lot of people putting in the work to get there. And a lot of the people that are there will all tell you they put in the work. Nobody says, you know, I thought I was good at this. I was a teacher and I pushed a couple buttons, made some money, quit my job. It's not the story you hear. The people that do well at this are typically PhD mathematicians. They're very smart fucking people. And you're competing against them because you're trying to beat them in a game where you take money from each other. And they're more sophisticated and smarter and faster. And it's hard to navigate through that space. And it's rare that you're going to find an edge against them. And we got to kind of teach you that. And if you're going to try to make it as a trader, you got to put in the hours and work. You got to learn the realities of this game and navigate through it. I didn't always trade with 70% or 80% win rate. That's not That's not common. That's not normal for most people. But I actually have an actual edge. I created something that has an edge. It's very rare to do that, but I'm also a very intelligent mathematician, which is usually the people that create edges. It takes a lot of work to create an edge. It took me 5 years of development to create a lot of the tools you see here. And it took 5 years to envision and create them. The risk intervals were created in 2016. We didn't perfect them into the DD bands until about 2021. It's about 5 years later. It's not like I just woke up one day with a cool idea and that's going to start making money. It's a grueling process to create an edge. So it's funny that 90% of these YouTubers and whatever out there have some kind of edge they stumbled on. Show me your losses, dude. That's all I got to say. But for you guys, we train you in the art of betting. It's like a professional poker player sitting there telling you, this is how you bet under these conditions. Here's this scenario, bet this way. Here's this scenario, bet that way. It's a book on betting. Why am I not chasing the long here? Right? There's all kind of conditions of why I do what I do. And so hopefully we teach you guys betting properly. We teach you no FOMO, no overtrading. We got rules to sit out, things like that. So that you actually are armed with something a pro would be armed with. Your cards are on the table. You look at your cards. You look at everyone else's cards. And your brain is not thinking, I hope I get a 3 on the next deal. Your brain is thinking, I'm betting this much because these are the odds of what I have. If I get a 3, I'm betting this much. If I get a 5, I'm betting this much. Most of you are sitting there saying, I hope I get a 3. Please, God, give me a 3. If I get a 3, I'll be a good person. I'll call my mom more. I'll donate more to my church. Please, just God, I need this one win. Give me the fucking 3. That's most of you guys, and it's sad and pathetic. It was me too. It was me too, begging for the 3, begging for the win. Please let this long go in my favor. You might luck into it 1 out of 20 times. You're going to luck into a career. So it's not like, please give me the 3. I need it. I need it. I need it. It should be, this is what I have. The chance of getting the 3 is small. Let me bet smaller. You're not begging for the thing you want. So the way that you handle trading is not, you're crying and begging to your deity of choice for the hand that you want, right? You're not betting with the hand you have, which is why you're losing as a trader. And until you realize that, you never come out of that shell. Isn't that crazy? So if you're just waiting for the move to carry the trade, you need to bet with what you gave. Let me walk you guys through my trades today. Okay, ready? Let's give you some preemptiveness on some of these indicators, right? So liquidity map shows me where order flow is likely to be high probability pivots and where volume flow will appear. Volume flow has to do with balancing related to options. So as you guys see, this is the open price. Blue is a pivot, open is a pivot. Open, blue, open. Just like the flashcard showed me at 9:30 before it happened. So because of that confidence, I'm all ready to ride the wave. Because we had a really crazy crash yesterday, I know that I can long here. And I know that I can long here, just like it shows 1A is a long, 1B is a long. Okay. This indicator at the bottom is a predictor of just this box. There to there if negative, there to there positive. Out the door it was negative, so I knew it was going down, which is why immediately I said, oh shit, this is a bad trade. Going to this side of the box eliminates this side of the move. So immediately here, my brain focused on there. Blue back to open. So because it could fall this much and I didn't want to take 20 points of drawdown the S&P on 2 contracts, right? That's $2,000 of loss. Too rich for my blood because I'm trying to make 1 to 2,000 of gain. So what did you guys see me do? I took my 2 and I trimmed it to 1 so that I can suffer that with half the loss, maybe about 1,000 maximum loss. And as soon as this fell to here, I've got my second trade back up to here. Now with this res less than 0, the midpoint is my exit target, even though I kept going. This is a really high probable scalp with about an 80% success rate. To the side of that, QQQ is falling to a pivot that has a 90% bounce chance. And down here, under these conditions, 70% off of the bull zone. Under ideal conditions, this is 90. So because I knew all of that, I trimmed it just a little bit and let my S&P fall. And when it got here, I hit NASDAQ with 2, which is a pretty decent position. And I made all that money on NASDAQ. My S&P went right back to neutral. I closed out relatively flat on that. And then I made the money on the NASDAQ and closed out and I'm done. You might have just thought, man, this guy talks a lot. He thinks a lot. Every step of that choice and those decisions and that risk management, no offense, is the difference between you and me. Okay. That's the difference between less than a year and greater than 15. Thinking about trading as an art form of betting like a poker player is where you need to be. Every decision I make is packed up into all those years of experience of doing this. It's not just, I'm just going to hold the button and go, right? It's just bet along. Why'd I pick 2? Why'd I pick 1? Why'd I hold that 1 here instead of stop out? Why'd I hit NASDAQ there? Why'd I close out there? How did I navigate exactly making less than $2,000 so I can inch forward to a profit target? How am I in control of my P&L? That's the best part. I'm in control of my P&L. I'm controlling it to make only a certain amount a day at a certain amount of risk I'm taking. So I can walk up to the Tradeify in 7 days and have them give me $15,000 for my $1,000 investment, right? So this is just to tell you guys that there's a whole layer of what you didn't know you were doing. And so when people say there's a lot of information in your course, it's designed to give you the stuff you need to know. So if you guys want to check it out, the link is here. It's really cool. It's practically free. We don't need to make money selling courses. It's $1 a day. Can you make a video on how funding programs work? Yeah, we can do that. Open your mind to a trader, the statistics and probability side, how math plays such a big part of the approach. And nothing that we teach is anything that's math heavy. You don't have to understand much math at all. We make it like colored lines and easy for you guys because y'all are used to seeing that. So it's a little bit easier to start. But yeah, harmonics, dude. It's like, here's the shape of something, right? And so the shape implies something else. What people did in the past somehow implies what other people are going to do in the future. It makes no sense. If I bought over here, then someone else is going to do something because I do something. What are you talking about? These two people are mutually exclusive, independent scenarios acting on their own behaviors. This person buying or selling has no care whether I bought or sold. And just because I bought or sold here doesn't mean I'm going to buy or sell there again. Historic price implies nothing about the future. And most of your very successful hedge fund managers, I always quote Jim Simons, the most successful hedge fund manager who ever lived, states that the market is nothing but a sum of random Brownian motion. It is just the sum of random behaviors. There is no bulk ebb and flow of what people choose to do. Independently acting people with their own motivations have no insight or desire, or no insight of what other people are desiring to do. You look at the history of people's patterns, it may influence your decision, but because there's so much variety in trading styles and indicators, everyone's using something different. There's no one thing everyone uses, which even creates a self-fulfilling move. So the majority of what you guys do, charting or otherwise, is roughly a lateral move to just looking at the price by itself. You're not getting any extra information from any other things you do. It's helping you organize a little better so you can organize your thoughts a little better, but there's no recipe of indicators, and I die by that statement, that will give you a profitable experience as a chartist. You're waiting for that magic algo to come your way, and it does not exist. The reason I'm here and you're there, and the reason other people are there and you're not, is just because of how they bet. It's how much they bet. What's his name? Peter Brandt. He's the guy. He's big on Twitter. Was saying the same thing as like, and I retweeted him. Said, you know, it's all about how much you're betting. Pax said the same thing the other day. A lot of these really good, you know, old institutional traders, you know, Pax right on the floor. These guys tell you it's how much you're betting and how you bet is really the trick here. And most people don't understand that that's where the pros are trying to scream at you. There's so many people since COVID selling charting as the answer to your problems. Step good to trade on. Yeah, Top Step is fantastic, Eli. So, as Matt says, the worst that can happen is earlier major success to the right place at the right time. Yeah, so I have this little speech I give people, which people love. And the speech is as follows. It's a very good quote. And you can quote me because I came up with it, but it says, the first trade you ever do wires you for the next 5 years of your life. It's incredible how powerful that is. The first trade you do wires you for the next 5 years. If the first trade you do makes you 50% of your income or in a single trade, you have wired your brain differently immediately with that. And it will take 5 years to unwire that bullshit wiring that you just gave yourself. You'll be overly confident. You'll overtrade. You'll start to see your Lambo. You'll start to see all the signs. You'll start to get reckless because you'll see how easy it is to make money. You'll not know how hard it is, how easy it is to lose the money that you make, but you'll get that like glossy-eyed look. If your first trade you take blows half of your account in 10 minutes, you're kind of going to be a little pussy for 5 years when you trade. You're going to be scared of everything. You're going to be scared of maneuver. You might even be scared to trade. You are now scared of money. You are scared of anything. You're going to be scared of driving at that point because you're going to not want to be a risk taker at all. Like, trading has the ability to rewire your brain the very first minute you do it. It's crazy. And so your bad habits that you've developed typically were set within your first week of doing this. And so that's why it takes a long time to unwire someone's brain. You got to break even as soon as you're in profit. What monthly maps show at this market? Let's take a look. Monthly maps, you got a good idea. Let's look. QQQ should probably still be a little bad on the bear side, and it looks like it is. Monthly maps is a 3-month forecast using options on what NASDAQ and NASDAQ futures are going to do. So inside of here, we still have bullish liquidation for the rest of the month. I mean, the rest of the week. And then, of course, bearish resistance here, which means that markets don't forget sell-offs. It's got to probably do something like that before it turns around. We got FOMC this week, so I wouldn't be betting on too much. But within the next week, we're back to stabilizing. So I don't think this is a permanent thing what Nvidia did. I think it's about a week at worst. We got FOMC, you know, so don't be like too crazy there. The S&P is liquidating for the rest of the week. Bull zone sloping up is not so great. But within a week, it turns back to being normal. So I think that at worst case scenario, this is down here one more time. And we're back to going. I think we're back to highs by mid-February for sure. The market is very stable and not, despite what most people think, it's not AI that's carrying the market. I mean, it's carrying a couple stocks, and the market cap weighting is what's making the market move as quickly as it is. But there are other industries that are doing like so freaking well, man. I mean, well, it's not as much today, but I mean, when you saw yesterday, I mean, comms are doing, discretionary doing good. Utilities were doing very, very well. Real estate was doing very well yesterday. Real estate's doing very well. You know it's doing well because mortgage rates are going up. Mortgage rates go up proportional to the demand for housing. And we saw the housing starts numbers come out, new build, you know, construction permits and stuff. You know, there's a demand for houses, a demand for buying houses. Banks are lowering their lending standards right now, and it's easier to get loans. And so people are going out and buying houses again. You know, people burn up all their savings during COVID, but now have been able to save a little bit of money. You know, housing markets get a little bit of demand, and when demand for houses go up, mortgage rates will go up. And so people are like trying to like, well, I got to get them while the rates are they are because they're going to keep going up. And so you're getting a little bit of surge there. I mean, the economy's doing pretty well, I think. You know, I don't think there's anything bearish about the economy right now. GDP's good. Employment's good. Inflation's coming down. Fed's not acting as quickly as they need to. But you don't need the Fed to cut rates at all to boost the rally. As a matter of fact, in 1992, Alan Greenspan was cutting rates while Clinton was in office, leading up to the 1996 election, just to give a little boost, you know, to the economy and to the market, so Clinton get elected a second time. They love manipulating, you know, rates. You know, in the middle of the dot-com surge, 96 to 2000. You know, we're cutting rates in 1996. It made no sense to fuel a bubble. And then as soon as Clinton got elected, they started raising rates. It's typical Fed-based politics there, and you know, make the market look good when the guy you want to win is going for office. And you know, they did that this time for Biden. So, you know, once he started raising rates, the market still rallied for 4 years. So I wouldn't put a lot of faith on the Fed being the mechanism for market to go. The real mechanism for market to go is that we had that slow start after COVID, and the economy's just practically healed itself. Now, Trump is going to be the one slow down to it of all possible things because he's going to create some expensive things. But it doesn't matter because the long haul version of what Trump is doing is very bullish. The short term is going to be knee-jerk reactions like saying we're gonna stimulate building more American cars to create American jobs. The stock market don't like hearing that. We like our cheap European and Asian cars, don't we? In the United States, we don't usually buy American here. It's too expensive, right? And so it's expensive up front. So some of the policies are going to have some knee-jerk downside reactions, but overall, the goal to tax Americans less, tax the globe a little more, is only going to stimulate commerce if you really do all the math there. It's not going to really punish many people. Prices might go up a little bit, but wages always reflect those prices. And with companies being as healthy as they are, they can afford to pay. They did in COVID. They doubled everyone's salary. So I'm not afraid of tariffs adding 20% because in COVID, we added 100% to people's salaries. People can afford it. So I think we're good. I think the market's as bullish as it's going to be. I think this is going to be the strongest bull market you will see in your lifetime, starting now. I think that's all we go. How did the DD on the S&P impact your trade early this morning as well? Yeah, that was another part of the trade. DD bands, baby. Ooh. Nasdaq DD band. It was right at the base as well. I was waiting for that. 88% of days stay inside of these bands, here and here. 4%, 8%. So I don't usually bet on band breaks. As a matter of fact, if the DD ratio is greater than half, I long this every single time as well. A lot of our indicators lined up at the same spot, so it was good. Yeah, you guys get the $20 deal for the class. You got to do it, man. You're going to learn so much that you didn't know existed, but you're going to come out of it if you commit to the end. At the end of 20 days, I promise you something. You're going to come out of it with one thing you've never had before, and it'll be the best thing that you ever had in your entire life. You want to know what it is? Do you guys want to know what it is? When you take the classes, you leave with something. I give you something to take with you, and it's the best thing you're ever going to learn. I give you a bullshit meter. It's a little detector that you walk around with. And anytime you aim it at something new, it beeps at you when it's bullshit. It's so good at detecting it. You get so good at detecting it. You save a lot of money after you spend these $20 because you're not easily fooled by what people have to sell. Rewiring you to see things for the way they are, you will laugh at most things that are pitched to you going forward. You'll laugh. You'll be like, I can't believe I almost paid $500 for this thing. I'm glad I went through Matt's class and no. Oh God, no. People leave the class and they go, the best thing I ever did was I learned that I don't need to go be buying all this stuff out there. You get smarter at trading and you see things for what they are. You go, you know, I looked at this guy's program and I was going to buy it, but it just looks like a class on charting. I watch this person trade and it's like one day they trade 5 contracts, another day they trade 10, one day they trade 1. It doesn't seem like they have any system that they do. They just kind of randomly trading. And like you learn the difference between like fully regimented and then somebody that's just like recklessly gambling. And so the bullshit indicator, I literally like give you a microchip in your brain. It beeps very loudly when someone else is pitching at you some kind of system or tool or magic beans algo or fucking whatever they call it. Candlestick algo, shape charts, color charts. And you see it for what it is. And you go, I don't know if this is really worth the $500 you're charging. This is very similar to this thing that's free. So you really get good at seeing things for what they are. This is what we train you to do it. And a lot of people have like come up to me and said, you know, after I took your class, you know, I basically, you know, I realized that like everything else I was paying for was just like, I feel stupid for buying it. Like it hasn't been helping me. It hasn't been doing anything for me. As a matter of fact, it's only made my gambling worse. People say that. And it's because to trade I don't think really good traders ever stop to train people. They're too busy winning and making money. I feel like people that are okay at trading make a little extra money selling stuff, but I don't think a lot of people stop and teach you guys how to bet. I think that's the biggest missing component to most people. You're an AMC ape, K-Spec? No way, dude. You guys not a few more years left to unwire. Yeah, AMC apes. You guys had a really fun start to your career. Do I trade during pre-market? I do sometimes at night, only when a good opportunity sets itself up. Only off of MHPs and DD bands over at night. So last night, if I was waiting all night to buy the dip here. It didn't happen until this morning though. $20 course fee does not include the platform. It doesn't. So if you want the platform is actually, we have this cool deal going on right now. The trading platform, so we're a company of 20 people. We built this trading platform called Rocket Scooter. We created a new style of analysis called positional risk, which is allow you to do risk management rather than chart patterns and things like that. It's a risk management based platform. It teaches you my position sizing tricks, which are all written right here in the guideline. Small positions, sit out, medium position. These are all guides of what I do. Today's 1A trade was a small position right here. Right. 1B trade was a medium position. When I hit down here, I hit it a little harder. That's all here. This is all position right here. If you guys never noticed, this is position sizing for each one of these legs. So these are my rules that I do and put them there for you guys. We made this platform. We're making more indicators and tools as the day goes by. They're all different kind of exploits of different things. This green is exploit of margin requirements. This is market maker hedging. These are bulls versus bears in the underlying. This is a bull bear bias indicator. 85% of the market cap is bullish. Very important to know that. So these tools are part of the platform. It was $200 a month. We have this cool deal going on right now that makes it $100 for the first month just to try it out. We want everybody to do it. There's the link. I just typed it. It's $100 comes with the platform, the tools, and the training comes with that. The 20 days bootcamp is packed into that. It's always been free for platform users. So like we go out of the way to train the users for free. You don't have to pay extra for it. So if you want to do the bootcamp, it's $20. But if you want to use the platform, it's free. The platform is $100 for the first month, and there's a deal that we're doing. We have never done this before. Second month is a $199 a month going forward for the platform and tools and all the extra stuff coming out. Which, by the way, this year we're going to be releasing Rocket Script. Create your own indicators, backtesting modules. We're putting all this extra cool stuff in the platform. But we've done a deal right now for everybody that is $40 off for life as like a promotion. $40 off forever, $159 a month forever if you lock it in. My old yoga studio, my gym both did this. If you got in early, you could lock in like a low monthly rate that doesn't ever go up, and that's it. So $159 for month 2 going forward, forever. And as prices raise, you kind of get that grandfathered thing going on there. And we're doing that for the rest of February. That's it. DD bands, go on ES and NASDAQ, not Spike. You can use DD levels on the platform screen. Yeah. So for these bands, you have to connect your futures account and get your futures data. I get mine through CQG through AMP. And on my watch list, I've added S&P futures, NASDAQ futures, and they auto-populate when you have a futures account. Yeah, 160 for life after the first month. Just to give you guys like a little bit of a we wanted to create like a grandfather program for people. DD bands. What about those that are currently paying $199? Not as cheaper. Yeah, you can go to the cheaper one. Get with Slacks, they'll hook you up with the code. Yeah, like it's a gift for everybody. For loyalty. We want to make it easier for you guys. You don't consider African $199 is like 5 months salary in Africa? Are you kidding? I don't even think about that. Are you speed limit? Are you interested in using the platform? if that is 5 months of salary for you, I'll give you the platform for $20 a month, dude. If you're trying to seriously learn trading, now I know if you're really serious about that, I'll give you the platform for practically nothing. I hate hearing that. That's really terrible. That I don't feel like I've considered everybody. I haven't thought of that. Would that be acceptable to you? If you could send, I don't know if that's true or not, but I'm assuming you're telling the truth. I don't mind paying for your other half of, or the majority of your platform for you, if you're really looking to learn trading. Is it considered a dead cat bounce? I mean, the stock market itself was not crashing. I had a tweet yesterday that said it was an Nvidia crash, right? Nvidia was the reason we were selling off. So it's more like this is just the natural progression of the market. I repeat, I wouldn't be in a trade right now whatsoever. We got Fed tomorrow. I don't think much is going to come of it. I would be very cautious that the market does something crazy tomorrow. So be very careful. I think when we trade a DD band is the limit of the day anyways. Whenever you tap a DD band, we always say the day is pretty much over. From here, it's a stretch to try to do anything else. And I wouldn't. I personally am not going to do anything else. Speed limit, join the Discord, and I'll give you, if that's the case, I don't mind. I don't think anybody here minds as well either. How does existing members get into the discount? You have to talk to Slacks. You can't claim the third world discount your location name, Toronto. I feel like Canadians and Americans are like fighting each other. And that's the weirdest feeling in the world. Like I'm so friendly with everybody. It's so funny seeing on Twitter, like Canadians and Americans are like yelling and screaming at each other. Like, why is everybody fighting? We're friends with Canada. I'm friends with Canada. Canada's like, we're going to shut off the power to New York. And everyone's like, well, we're going to shut off your military. I'm like, why is people hating each other? Canada's like the world's nice neighbor. The national word in Canada is sorry. It's a Canadian joke. A friend of mine says the national word is sorry. Everyone's always so pleasant and polite in Canada. Who would fight with Canada? We got to calm down there. We're going a little too. GDPR news in 17 minutes. Yep. It's the politicians that are fighting. There's people like very defensive about it. Like I'm like, this is like our friendly neighbor to the north. Like nobody should be fighting with each other over here. But I think Trump's trying to build like a super North America, which I guess makes sense if everyone can just like hear me out. Maybe it does make sense because the powers of the rest of the world are sort of allying up strategically, economically, and militaristically. So whereas we kind of need like a North American unified military power. Imagine Greenland, Canada, and Mexico, like the whole side of the world would basically keep us strategically strong forever as a continent, which I think everybody wants. So we'll just see how it works. We're sorry, eh? The only thing fighting between us should be the ice hockey fights. That's what I'm telling you. You don't pick on Canada. Have you guys watched ice hockey? That's like blood sport, man. That makes football look like baby sport. Okay. Like when it comes down to it, Canadians will put up a good fight. But anyways, I think Trump is positioning us against what Russia and China and all of them will be in 100 or 200 years. He sees the future there. And the growing, the growing dominance of other world powers that we need to kind of expand the American interest as we all work together to begin with You know, he's kind of like trying to create that. We need to control the northern trade routes and set up military bases there to secure us in Europe as trade allies, things like that. Didn't work well for European rally, really. United States of North America. Maybe we can get like a cool name if we all unify. United States. The USAC. United States, Canada, Mexico. Do I really want Canada's 60-year-old planes and muskets? The Great America. Yeah, like the Great America. Like I think it'd be cool if we all became like in the same country. That'd be kind of neat. I'd welcome my Canadian friends with open arms as brothers. Don't forget about Mexico. He's working on that too. I think I see a future where the cartels are chased out of Mexico and Mexico becomes a very close ally politically as well for the goal of global dominance for the American continent. Call us Nighthawk. The dispute over the North Pole, when shit starts to melt and shipping routes become more viable. You know, that makes a whole lot of sense because of the whole global warming thing. It becomes easier to ship. The closest route between northern Canada and Russia and Europe is through the North Pole. A lot of times you just hop and skip over. Because the globe is a ball. You can literally go this way instead of this way. All new kinds of trade routes. That opens the door for Russia to enter, you know. Imagine like 500 years from now and the waters are nice and warm there. Toasty. Does the platform work on mobile and iPad? Yes, it does. It's browser based. Cartel's got to go. That's got so much potential to grow. I agree. I think the whole reason he's doing that is because he wants to remove the corruption in the government and really grow them as an ally and superpower itself. Imagine like the Gulf of Mexico shared by Mexico and the United States. It opens up so much potential for like good, honest trade, you know, like, you know, Mexico could grow into a very strong global superpower just because of its proximity to the US, you know, working together. It's like the cartels just kind of own everything, you know. You can't really... They own the politicians, they own everything. Later, Ransom. See you later. The Gulf of America. LOL. Oh, yeah, the Gulf of America. It's so crazy. Like, I mean, it's fun. I hate to say it. Whether I agree with everything or don't agree with it, I kind of love watching Trump be like on his Napoleonic conquest. You know what I mean? Like... We got like Alexander the Great over here trying to like build an empire. It's so great to see it in the modern era. It's like, you know what I'm saying? You're seeing the piece, and like, I guess just in a reality show sort of format, I'm enjoying the entertainment of watching it take place. United States of Mac. That kind of reminds me, like when I hear Mac, I think of Always Sunny in Philadelphia. The United States of Mac. The Big Mac. That's what I would call it. The Big Mac. That'd be hilarious. All right, so guys, trading day's over. 20 on 463 tap. Nasdaq upper DE band. Usually from here, I don't do much. That was a great day. I pulled in about 5K in the Tradeify accounts. Gives me an inch closer towards payout. 9K to get a payout. I've got 7 days left. I wasn't trading Friday. Oh, I did. I took a small trade on Friday. Thursday. I think it's 3 days. I either got 7 days left or 6 days left. One of the two. I'm still gonna hang tight. I'm saying days over. We can hang tight and hang out with each other. No real hurry to get out. I do have to leave for a meeting in like a couple hours though. I'm good here. We can watch things pan out. Ooh, 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 ooh. Yeah, we'll have our class today at 3:30 Eastern. Actually, it might be later. I do have to leave to go to a meeting. It might actually be later in the day. I'll let you guys know. Because the meeting is an hour away. Oh, now I think about it. There's like a 50% chance I might not be able to do the Zoom call until like 4 or 5 today. If it's too late, I'll skip it for tomorrow. Did I like your Grok song? Since I've been sick, I didn't get a chance to go through and look at all the songs. That's the next thing I got to do. You guys did all your song submissions. We're gonna have like cool songs for the stream. AI based music. The open and close box anticipating the end of the day. No, so what the open and close box is let me show you this one right here. So what it's basically doing is that the open and close are high volume pivots, right? The previous day's close and the current day's open are always high volume, right? So this is yesterday's close. This is today's open. Anytime the market opens and closes at different places, there's always a gap. Like we close here, we open there. They call it a gap, right? And so there's high volume on both sides of that gap. So in the middle of the gap, there's a liquidity point where the high volume of buyers and sellers are just evened out. We call it the half gap. So the half gap is very important. When I'm trading S&P futures, I'm going to be looking at SPY and its gap by itself. And what we actually found out was that if we look at the net sum of the market cap of all the stocks in the SPY, if markets are moving or stocks are moving this way, they're more likely to fill in the gap that way than to go to here if you're above the half gap. So this is taking the net sum of all the market cap of the index stocks and telling you how much the index is lagging behind it. So an example is if the index is like up here and the stocks are not, then the index is going to yank down to the bottom of the box like it did this morning. Do you see that? Let me make it bigger. It's truly like a game-changing. It's an arbitrage indicator. It tells you how far the SPY is lacking behind the stocks it's tracking. And so it uses this, and the math of the class is detailed in the class. But right here when the market opened, this number is negative, which means the S&P favors this side of the box rather than that side of the box. That's what that does. So the idea is right out the door, when that number goes negative, that's why I was like, oh shit, that sucks. And we fell to here and I trimmed my position immediately, 100% because of that. And it only took until about right here when it started moving in. Now, right now the index is overshooting and moving faster than the stocks it's tracking because we just had a big volatile sell-off. So a lot of times this isn't as good of a leading indicator as it is. It was a leading indicator of me being cautious on the long side. But for the majority of the time, if the S&P is trading down here and this number goes positive, it yanks right back up to the top of the box. It's a pivoting indicator through that gap. And it affects right there. So right now, what you can see is a couple of things. The Nasdaq stocks are doing much better than the S&P stocks on a market cap basis. The S&P is relatively neutral. The S&P has overshot to the long side, whereas the majority of the stocks are basically here. The S&P has overshot the stocks because this is indicating the stocks are relatively neutral today, mostly flat, mostly dojis, right? So I can go in there and probably look at the sectors and tell you that the sectors are probably neutral or at least balanced. And as you see, that's pretty balanced. For every up green, there's a down red. It's very balanced. Red, green, red, green, red, big green, right? This is 50-50 market, right? It's not tilted one way or the other. For every 50% this way, there's a 50% this way. You would call this an easily balanced market, right? So right now, the S&P is overbalanced relative to the stocks, and that explains why it's selling right now. And that's why you take our classes, Matt. You see what I'm saying? Balanced neutral market. But it's not even just for convergence. It's useful to understand how far the SPY is away from tracking the implied value of the index based on if all the stocks are to fill their gaps. S&P is still bullish enough, which means it's going to catch support here. So this actual white line is a tiebreaker at this dotted line. So if I'm trading S&P futures, I'm going to be looking at the dotted line when we get here. My eyes are going to go down to here to tell me what the stocks are doing. So I got a tiebreaker one way or the other. Yeah. So the idea comes down to, you know, is that number positive or negative? It's a seesaw at the middle. This is telling you that the stocks are mostly balanced and it's slightly bullish, which is good. The slight bullishness is why the S&P is still maintaining an upward trajectory. But the fact that the stocks themselves are back to neutral, SPY is kind of overshot on that short squeeze, and it's looking to test here to decide what it wants to do next. Okay. And so the math of that is actually pretty cool. I'll give you guys a little detail. So since you have open and closing volume here, resilience really only takes into account what the stocks are doing inside of that box. It ignores any of the stocks movement outside of there, and it adds up all the 500 companies. If like Apple is in the middle right here, and all other 500 stocks are exactly in the middle, then resilience will be perfectly at 0. If one stock moves slightly higher than the middle and all the rest of them are exactly at the middle, resilience goes to 100. If one stock goes slightly below the middle and all the other stocks are at 0, it goes to negative 100. It's a very sensitive indicator that's telling you this seesaw is slightly tilted to the bull side. Because what happens is that if the market is raising price off of the most liquid spot, remember, this is a liquid spot, this is a liquid spot. And in between two liquid spots is the most liquid spot. You have two liquidity points, and this is the liquidity of the liquidity points. It's the most liquid spot. So if the stocks are slightly higher than the most liquid spot, then we take the assumption that the stocks need to complete the path to the next liquid spot. So we actually take this value right here that the stock hasn't traveled. The actual SPX is based on the actual value of the stock, but we take an actual an implied, which is that calculation. We take how much the stock needs to move to fill its gap, and we create a new SPX. So we have a real SPX, which is the value of the stocks, but then we create our own SPX, which is the implied version. If all the stocks were to find their gap fill relative to where they are in the box, then the SPX will have a slightly new value. If it's greater than the actual value of the SPY relative to its tracking the SPX, then resilience will be negative. To tell you that SPY needs to trade higher to catch up to the Apple move that hasn't happened yet. So it's designed to be a leading indicator because it's looking for moves that haven't happened yet. And what it does is it snaps your fingers to recalculate what the S&P would be if all the stocks were to move to one side of that box or the other. And when that happens, it gives you an overpowered or underpowered view of the S&P ETFs that are tracking the SPX. So right now, as most of the stocks are now moving this way through their box, and right now the majority of the market cap is now down in here, whereas SPY is up here, there's a discrepancy and an arbitrage opportunity inside of the SPY right now. And as you see, while more of the stocks are filling their gaps back to the downside, the S&P is running down to meet it. Does that make sense? So feel free to have a look at that. That's this indicator called resilience. This was if you go to the Discord, you guys that have signed up, make sure you go to the Discord. You'll see this this room called Boot Camp. In the boot camp itself, off to the current boot camp down here. These are the past iterations. This is the current one that we're on. This class that I'm talking about is actually video number 4. So on the 20 days, this is what we're going through. And you'll get that. Gotta love these consistency rules, though. It's 20%, which is, if I get about, 1,500, 2,000 a trade, I'm easily gonna hit 20%. I'll be weighing. I'll be like closer to 10%. 5,000. So now what this is going to do is still try to maintain a trajectory, and maybe by the end of the day, it's going to do something like that, I think. In rational markets, this is a leading indicator. In an irrational market like we have today, like post-crash market, it's not leading as much as it could. The index is actually moving faster than the stocks because it's overreacting to yesterday's Nvidia sell-off. And most normal days, and irrational is like seen by this indicator right here. If you click this little button right here, you'll see that we have like hedge breaks and stuff. The markets just move. Sometimes the index will move faster than the stocks, and that's just because SPY is independently traded. When all these lights are yellow and green, resilience tends to act more like a leading indicator. So right now things are somewhat back to normal. I trust resilience as a leading indicator. From here, I would say that the desire for this market to be anywhere is to actually be here. So by the end of the day, we're likely to see a sell-off because I don't, and plus also, 88% of days close inside of these green bands. It's a high probability that we don't rally from here. The reason I don't short it to here based on this is because I don't ever bet against a bull market, and I only short off of specific pivots. This is a pivot I will short from, but I only short from there if this ratio is less than half. The stocks are bullish enough, I don't take the short. So now it just basically left me to sit out. The reason I don't also fade it to there is because you don't know how high it's going to go. Ultimately, like by the end of the day, it can like reset there. But I don't bet that markets sell off, especially when they're bullish. Like I just kind of caution to be on the sideline. The only reason I'm not making another trade here is because whenever I hit these bands, usually ends my day. I trade inside these bands. It's such a strong pivot. I don't really do much outside the band. Where's the guy? The guy that's from Africa. Are you still here? I forget where your name was. What was his name? Speed limit 2025. Send me a message in Discord. Hey, go to Discord. Add me as a friend. Yeah. Yeah, welcome to the community, man. I'm sure everybody here is 100% excited to help you out. I guess I never realized how hard. I didn't know that the salary discrepancy was so different relative to you purchasing American products on an African salary. If that is really the case, that's incredible how much different it is relative to what we make. So obviously, you know, we are helpful to the community here. I would be honored to hook you up for sure. 199 is 5 months of salary. That blows my mind. That would be the equivalent in the United States of $50,000 a month for most people. 50 US dollars, 50,000. Most average Americans make roughly 10 to 15,000 a month before taxes for your average 6-figure salary after 10 years of work. Imagine you guys paying 50 grand a month for a trading platform. It blows my mind. So I guess I do have a somewhat of a grasp of that. My social media manager is from Nigeria, so his salary ask was actually very low, and I gave him a more comparable American salary. I do remember when he was asking to get paid, it was like, I was like, are you sure? And it makes sense why it was so low. So. The monthly fee is your minimum salary wage. Wait, $199 is how much you make an hour? Or a month? I need to have a program where, like, if you prove you're from some country that has an income discrepancy and you're, you know, interested in US stock markets, there's no way in hell we should charge full American prices for people that don't make comparables. Anything you buy should be a percentage of how much you make. Now we're spoiled here where $200 is like nothing money for these people. These degenerate gamblers in here waste thousands of dollars like it's nothing. Like, I would feel so bad if somebody to pay a month's salary for a product of mine. You shouldn't pay a third of your salary for your house, much less like a digital product. This is like in the UK. I'm gonna open up an exchange, you guys. Like we're gonna sell Rocket Secure subscriptions on a global exchange. So now you can trade them, and they're gonna value appropriately with currency pairs. This is gonna get complicated. But essentially, if you have a hardship or if it's too expensive, don't be afraid to approach us with that. We're not these like global juggernauts here trying to like make sure people are feeling hardship. I don't want anybody to feel any more pressure than anyone else trading. So I want everybody as Rocket Secure to have a baseline feeling. Whatever someone feels for the subscription, like if you feel like it's slightly much or slightly not, or that's okay. I want everybody to have that same feeling. So if you can prove to me it's the same feeling for you, I'll give you a discount rate. I don't want some people to be like, I'm struggling to pay this. I want people to be like, you know, it's 200, it's nothing. So I don't really mind. You live in New Mexico, does that count? I need to charge you more if you live in New Mexico. I'm going to raise the price on you, Steve. You're also from Nigeria? Oh, okay. Cool. And feel free to tell everybody you know, like if you know people that are like trying to learn trading, you know, we're really trying to reach people. I mean, we're a community of people. I don't think anybody here would mind if you paid a slightly lower price, if that is the actual situation you're dealing with, you know. $200 a month is less than 2% of your average daily salary in America. You know, that's not going to be anything that's going to Anybody's going to balk over. If you're not trading futures, Matt, you don't need to have a CQG account. The CQG account or any futures broker that you have through CQG will just allow futures data to come to the platform. It allows you to put your futures ticker here, and it gives you a couple extra perks like DD ban automatically populates, and these alerts need to update. on oil, yeah. Yeah, so the only way to get futures data showing on a futures chart is you have to have a futures ticker open. So the DD bands are, so some of our calculations are calculations in futures, some of them are calculations in equities. Yeah, so if you're not going to do futures, totally fine. You don't need any of this data. This is more for SPX, SPY, QQQ, sorry, this right here. This is futures. So I have them side by side as a futures trader. If you're just trading options or trading SPY or QQQ or anything like that, the liquidity maps are based in equity. So all you need is our data feed for that. Futures is just a whole new extra stuff. Oh, that purple line, that's old. Sorry. That was the yesterday's catalyst. So whenever we do like one of our sit out rules when a catalyst is active, which was yesterday, that was just yesterday's line. So here we've got, let's see, the CB numbers come out yet? Well, let me see. What do we get? Was it 9, right? Yeah, that's right. 104.1. What are we waiting for today? I forgot to look at those. FedNow GDP. GDP seems to be up 3.2 on a 3. That's actually not a bad estimate there. Consumer confidence slightly down, but still way above 100, which is good. Estimate of GDP growth right about 3.2. That's towards the high side. That's pretty good. That's not a bad number on that. CB consumer confidence slightly lower, but still above 100. Times that it does get bad, like COVID, when it falls below 100, the market's in peril. That's really all you need to know about the CB numbers. Other than that, it's usually just noise to the market. When you go back to all the recessions you've had, like the 1990s was pretty bad, 2000s was bad, 2008 was bad, you know, and of course COVID was bad. That you can see that since then, above 100 is good. And ever since we've recovered from post-COVID, where everybody had those crazy high salaries in 2021, we've just been coasting along. I mean, it's not actually bad at all. It's actually even better than it was pre-COVID, leading up into the COVID sell-off. I mean, maybe the last year, the 4 years of Trump's presidency was close to 120, this exuberant bull market. But even in the first couple years, like right outside of the recession, 2014 to 2018, I mean, it was like 80, 90 while we were still growing the bull market. So sitting comfortably at 100 is actually rare. And it's very rare that you see that for long periods of time. And we've actually been sitting there for almost 4 years at relatively close to 100. And other periods in history where we sat there for 4 years, I mean, it's just like very rare that it hangs tight. I mean, that's actually pretty stable. We had that bull market of the 90s led off by a stability at 100 in the 80s. So, I mean, here's the bull market I was talking about. The 1996 when Greenspan was like cutting rates and then raising rates, the market just launched out of that, you know, 2 years of sitting close to 100. Not in a bad place where we are right now. This is actually very stable. You know, it's just, I wouldn't be at all worried about any of the economic data we have. So we good. Nice bull market, man. I love it. Was high COVID salaries supported by the forgivable PPE loans? I would say so. I think that that's a big component of how people had the money to pay people to bribe them to come back to work. I mean, people thought there was a global pandemic that was killing people, whether you believe it to be true or not. Obviously, it was a very strong viral sickness that a lot of people had. But your degree of risk, right, as an employee of a company, you had to decide on your own what the risk was. Did you risk death to go back to work, or were you like, it's not a big deal, I'll take the risk? Companies were battling with people not wanting to go back to the office, so they had to bribe them to come back to work, the ones that weren't allowing you to work from home. So to get people driving trucks again and things like that, the infrastructure part, moving boxes, moving things, to get people to come back to keep the economy moving, they had to bribe them with high salaries. And those awesome loans that you got gave them extra money to play with. Giving people more money made the cost of salaries go up because there was fewer workers than jobs available. And therefore, everybody was now, well, I'm coming back to work and I don't want to risk my life, so you got to pay me more. This other company is going to pay me more. You need to pay me more than them. And that big salary war, whenever you had that free money, plus there was a lot of stock buybacks, when companies, invested in themselves when everything dipped. Companies had a lot of money sitting around. They decided to enrich the employees because it was hyper competitive to get labor into the roles when people thought there was a pandemic, right? So that's exactly part of the mechanism, Robert. And I wouldn't discount that at all. Money was easily available in multiple ways and to get people to come back to work. Easiest way to get them is to pay them a whole lot more. People are making double the salaries. And now if they had all these big money and big bonuses, they were going out and buying houses and gobbling them all up. And then there was a shortage of housing materials. And so the cost of construction went up and the cost of those laborers went up because the same thing applied to get home builders into back to the workplace, pay them more. All your construction and laborers got paid more. And the cost of materials, there was rare because people weren't shipping things back and forth. They weren't driving boats around and things got more expensive. Labor got more expensive. And then you had to charge more for house, but it's okay because people are going to pay more because they're getting paid double their salary. And with interest rates being as low as they were, people couldn't buy an expensive house at twice the price with twice their salary fast enough. Locking in a 3% rate. And people got excited about that. And now they're upside down in a very expensive house that's losing money that they don't have to pay a big mortgage on. And so that's why money is stretched. A lot of people overspent when they had the money, and now they're locked into something they can't leave. You're not going to leave your house that you got in 2021. You're stuck there for 20 years. You're not buying a new house. You know what I'm saying? So whatever job you had paying you that money, what if they laid you off? You can't afford the house anymore. That's the problem people are having. It's not that eggs are more expensive. It's that they locked into something at a too good to pass up deal, and their company may not be paying them double the salary anymore. They may have got laid off and had to go shop around now that rates are competitive and got a normal salary again. Now your $1 million house doesn't have a, $7,000 a month escrow. You might be sitting at like $4,000 or $5,000 because you got in a great rate, but that's still a lot of money if you don't have double your salary. You might be paying 20 or 30% less for your overall house than most people who bought it now, but I think it's $7,000-8,000 escrow and $1 million bucks. Probably paying $5. But One of my friends is texting me telling me I just need to start a hedge fund. It's not like a lot of pressure. Do I see bullishness or bearishness based on Nvidia monthly maps? Let's double check. Let's see what I see. I say Nvidia has had such a shock to it that the options may not fully show much, but let's see what we get. Hold on. I just froze my platform. What the heck? What the heck? No. Hold on one second. Let me refresh my browser. Hold on. Let me close everything down and open it back up. I run way too much stuff on my computer. I have like 50,000 browsers open. Yeah, it's not really fully developed yet. You can just see that Nvidia just has built. There's just rapid push for put flow. We saw those coming in at 150. So 150 is really strong resistance for like the next month on this. It's going to take a while to build back up to here. There's really nothing on the bull side just yet. The bull side is slightly improving, but I mean, we're so far away from the bull zone. Nvidia's got 2 weeks of this. It doesn't even pass into bullish territory until like 2 weeks, until like at least a week from now, after this Friday and into next one. So we got another week or two of Nvidia being kind of meh. I don't know when Nvidia's earnings are actually. Does anybody know which date? So not good, not great, but I mean, it's a single event on Nvidia that you have to ask yourself what you think is going on. When Nvidia is moving like that, it's moving much more irrational and faster than the options can even display. So it's a little chaotic right now. Dan, I agree. 26th of February. Thanks, bud. Dan got it there. So end of February. So it might not get any love. Nvidia might be permanently depressed until or at least that thing might bounce really quick and then chop back down. I think news like that is significant enough that the AI bubble got popped pretty bad. The idea that we're not just like, soaring solo in the space. AMD. It's going to take a little bit to come out of this. You guys remember when the FOMC changed their mindset and the S&P took like a month to come back? AMD is still just in bad shape. Still not doing better. Bear side, there's no momentum here. Still downward movement. Lame. Short AI hardware, long AI software. I don't know. Microsoft buying TikTok. I heard about that yesterday, or in talks to buy TikTok per Donald Trump, and that would explain a little bit of the movement today. Microsoft up decent amount. For them to have some, now again, Microsoft is like the company full of boomers that don't understand cool shit. So I don't know what's going to happen. I used to complain. Now again, remember, Tesla, and I always say it like this. Tesla has Twitter. because it's Tesla that bought it. It's Elon. So Tesla has Twitter. Facebook has Instagram. Right? Apple has iPhones. Google has its own slew of products, Androids and this and that. And now Microsoft will have TikTok. Everyone's, if that's the case, how's it going to be? Google has YouTube. That's right. Google has YouTube. I forgot about that. What does Apple have? Apple has Apple TV. Everyone's got some kind of social, whatever. All right. So think of it like this. If Microsoft used to have the worst interface, I used to complain about this on the Xbox. Xbox Store was like it was built in such a clunky fashion by like people that just didn't understand friendliness or usability. Microsoft was never good at stuff like that. So if they just inherit, TikTok, and when Microsoft inherits something, they tend to ruin it. I don't know. You guys ever played Halo? Ever since Bungie, 343 is who ruined Halo. But long story short, Microsoft's kind of like interface on their Xbox was always real clunky and weird. It didn't feel nice. And TikTok kind of feels nice and use it. It's nice and smooth. But if they were to buy it, what do you guys think of Microsoft stock's going to do? Right? It's recovering relatively nicely on that theory. And it's, TikTok's a mainstay program. I mean, I could see Microsoft going up to 540, 560, 580 just on an acquisition that alone. I mean, there's money to be made there. So we'll see. Yeah, Xbox Store was made by people who never bought or played a video game in their life. It was like when I went to the store to buy a game, it was as follows. Like there were categories just on Netflix, and it was like most played, right? It was most played, most featured, most downloaded, most popular. They have like the same category, and each category is like the same 10 games. And it was like the weirdest categorying system. And I had to like navigate really far to get like categories to sort by like RPG or sort by first person shooter. It was like to have like 10 different ways to say popular. It was just the weirdest thing ever. And you had to like scroll through menus just to get to something. It was just like, it was kind of like if somebody who designed Windows was designing some interface for like modern things. Anyways, they didn't seem to get it. And then when they made Bing, nobody used it. And I remember there's rumors. Somebody was like, there was one thing that somebody said, I think in 2017, they were telling a story how Steve Ballmer was walking around. And if he'd point at you, you'd have to say Bing. You go, Bing. And if you didn't do it, he would yell and scream at you and fire you. Sometimes he said his friend got fired on an elevator. When Steve pointed at him, he didn't know he needed to say Bing. So, that was like the culture of Microsoft. Anybody else here use Bing? I use Edge for Rocket Scooter, I'm not gonna lie, but that's because I don't have any extensions on it, and it's just bare bones just for Rocket Scooter. But so we'll see if they're in talks. And I also heard yesterday from a friend of mine that the CEO of TikTok is no longer the CEO, or he silently stepped down, or on his name on the website it doesn't say CEO anymore. Is there something I missed with that one? Not so subtle Windows shade. I know. Windows has gotten a little bit better, but I hate that they can't even get their... Like, I can't take Windows Arrow off if I want to on Windows 11. It automatically tries to organize my screen for me. I hate that. I can't. If you have multiple screens, they have their display settings where the screens like don't line up. You can't just say put all 6 of my screens together as one continuous thing. You have to like play with it so much just to get your screens to not like be disaligned or not have a border on each edge of your screen. It's so weird how 30 years later they haven't changed one very important feature that's important to usability. That's a Mandela effect. They never had a TikTok CEO on there. Apparently, that's what you heard. Oh, I didn't know that. All right, negative res, market rallying. I don't know how we end up today, but I think that overall, I'm sitting out for now. We're just streaming to hang out. The CEO wasn't his TikTok bio. Oh, that's really okay. That's what my friend was saying. He's like, on the website, there wasn't a CEO. That's kind of cool. So it was like a silent. Maybe there isn't a CEO. Maybe it's just the Chinese government. All right. So highest move on the S&P, I see 6092, and that's resistance there. I really do think that we end up kind of neutral here. This isn't getting momentum. That's enough to continue to lift the stocks a little bit, but I'm not betting on a breakout rally from today. I did take my nice good longs. It was a really awesome trade that I did. Somehow this tells me this. So I don't know. Kind of feels that today. All right, I think I'm done. What do you guys want to do today? Let's hang out. I'll see y'all later. If I have to cancel the Zoom call, we'll catch up tomorrow. But I do have to go to a meeting across town, but I'll be back later. I love you guys. Thanks for tuning in every single day. Oh, nobody does what we do. Not even close. We're glad you tune in. We may not be the flashiest, but we certainly are the most talented here. We're going to do it right. So thanks for tuning in. Be here every single day. We train you guys on what we know. We teach the best futures trading course on the planet. And it's practically dirt cheap. We want people to learn. We want people to be empowered. We want people to walk through this life with the tools they need to get to where they want to go. I'll tell Pickle and iDoc you said hello. Adriano, I'll have to get you later because I have to exit the stream with that liquidity map. But you guys check it out. Our courses are literally $20. Go to rocket.place. That is rocket.place. 20 courses, $20. You won't be disappointed at the wealth of knowledge that you get packed into the cost of that little book there. Today, we're going to be covering DD bands and DD ratio, one of the most important of our tools. We'll be here later on in the afternoon. If I have to reschedule, we'll do it tomorrow. Cook pickle or ribeye. Oh, that's hilarious.